Right. All right. Is my voice audible? Okay. Good morning, good afternoon, good evening, wherever you are all around the world. Welcome to Insurance Specialization 2025. I'm so excited to have you here wherever you are. All right. Is my voice audible, everyone? Okay, if you all can hear my voice, can you please chat in the group or in the comments wherever you are, whether you're watching from the group or from Instagram or from YouTube? All right. Okay, thank you. Thank you. All right. So, my name is Nitesh Gyanchandani, and I'll be your MC for today. And I'm very excited to welcome you to this session. And we're going to learn together how insurance specialization can help you become a better advisor and close bigger cases. If you want to make 2025 your best year yet, this session is something that you really don't want to miss because we're going to learn directly from Dr. Sanjay and some amazing speakers who will share with you how insurance specialization has helped them. All right, I'm excited. I'm pumped. I hope you are as well. Before we start, can some of you who is watching, whether you're watching from Facebook or from YouTube or from Instagram, share in the comment your name, where you're from, and what you'd like to learn from today's session. Go ahead. I'd love to get to know you. I'd love to get to know whoever is watching today. All right. Hello, Zahidi. Hello, Gregorio. Hello, Sarina. Hello, Tekmeng. Hello, Christina. Hello, Elvi. Hello, Bharat. All right, Maharashtra, India. Amazing. All right, keep going, keep the chats going. I'd love to get to know you. All right, while we are all waiting for some of you to chat, just few things I'd like to share so that we can start off the right foot, right, for today's session. The first one, for some of you who are watching from Instagram, specifically Instagram Live. If in the middle of the session there are some turbulences or some challenges with your life, I highly recommend you can also watch from Dr. Sanjay's YouTube channel at Sanjay Tolani. I repeat, for some of you who is watching from Instagram, if in the middle you're facing some challenges with the live broadcast, then I highly recommend you can also watch from Dr. Sanjay's YouTube channel. And on my right? I think it's on my right. Correct. There's a barcode that you can scan that will give you the PDF for today's session on insurance specialization. Today, we're going to be learning some really powerful material. So scan the barcode. Don't forget to scan the barcode, and it will be very helpful as you are going through the session. All right, let me again read the chats. Abhilash from Tamil Nadu, India. Hello, Abhilash. Ems from Philippines. Hello, Cecile. Hello, Vijay from Bangalore. Rajesh from Malaysia. All right, Philippines. Hello, Bangkok, Philippines, Trinidad, Kenya. Hello. So good to have you here. All right, thank you. My audio is good. All right. So, yes, don't forget, for those of you who are watching from Instagram, if there's any challenges in the live session, go to the YouTube channel of Dr. Sanjay and you can also watch from there. And then don't forget to download the PDF. And one of the most important things for you who are listening, today you're going to be learning about insurance specialization from Dr. Sanjay himself and also from some really amazing speakers. We have 6 speakers today who will share with you their experience, who will share with you their insights, and how using insurance specialization has helped them level up their career and become the best in their field. You're going to be learning from them directly. So my note for you is take notes, listen carefully, ask questions using the chat. You're more than welcome to ask questions and give your comments. It's not a one-off session, it's going to be interactive. So use the chat so you can, gain value from it, right? And stay until the very end, because from every speakers, you're going to be able to learn something really, really powerful. I can guarantee that. So stay until the end, and follow the session until the end because you're going to get a lot of value. Singapore, all right, Kolkata, Philippines, Singapore, Malaysia, Veera from Hyderabad, Teresita from Philippines, Malaysia, Trinidad, Tobago, Kenya. All right, I am excited. Are you excited? Are you excited? All right, I'm very excited. So, without any further ado, let's just get straight to the session. I'm going to introduce you the man himself, who actually don't really need any introduction, right? But I'm going to do it anyway, right? 327 top of the tables in 2024 alone. 327 TOTs in 2024 alone, the leader of the Sanjay mentoring family. Before I call the man, can I have all the fire emojis, fire chats in the chats, please, so I can call him with excitement? Let's fill up the chats, please. All right, let us have it for the man himself, Dr. Sanjay Tolani.
I call this my favorite topic, is because it allows our industry to get the right system in place. Now, one of the biggest challenges we have in our business is when we started in this business, we weren't told what is the things that we need to do. And in our business, the most important factor is understanding what am I going to specialize in. Do you see, when you start any business, it doesn't matter whether you are in the world of textiles or you're in the world of electronics or you're in the world of medicine or engineering or finance or banking, there are specialists in every industry. But in our profession, unfortunately, no one has spent time to tell you what should you specialize in, how do you specialize them, and that's what I want to cover today. I mean, how many of you come from an investment background? Just if you don't mind typing, I do. So I kind of get an idea of how many of you come from an investments background. All right, I'm looking at two screens, so I'm trying to keep a close eye on everyone's comments. By the way, guys, you are allowed to ask any questions. If I can answer them midway, I will answer them midway. Otherwise, my team is collecting these questions and I will answer them towards the end of the session. I do want you to know that we might run a little bit over today because I do want to cover as much as possible. I do want to share with you as much content as possible so that you guys can kind of get 2025 correct, right? So, all right, so Zaidi comes, says, I do. All right, Joyce says, I do. Banking, all right, so we've got some bankers in the audience as well. That's fantastic. So you see, when you're in the world of investments, they call themselves an equity specialist. They'll call themselves a mid-cap equity specialist, a large-cap equity specialist, a venture capitalist specialist, a private equity specialist. And all these types of different investments, nobody calls themselves a pure investment advisor. A lot of people go down the route of specialization, right? So they become specialists with equities, with bonds, with sovereign debt, with commodities, with REITs, some with mutual funds. So do you realize there's so many different specializations in the world of investments? But in the world of insurance, why do we not have classifications and specializations? And that's something that bothered me. Because after being in this business for now 25 years, there's one thing I realized. We need to have specialization. And that's why I want to spend this day with you to kind of run you through why it is important to be a specialist and what are the opportunities you have if you do decide to become a specialist. So I'm not saying every single one of you has to, but I would recommend you do, because there are four things I want you to understand. Number one, generalists are not as valuable as specialists. And we know that for a fact. Can we agree to that? That generalists are not as valuable as specialists. There are a lot of families in 2025 that have started to focus on legacy planning. Have you realized the concept of legacy, inheritance, um, asset protection has probably become one of the most common conversations that are happening? Now, for those of you who haven't downloaded the PDF, please do download the PDF. You will have a lot of content that will be in that PDF, which I might not be able to cover today, but I do want you all to read it. Guys, we spend a lot of time trying to put something like this together. And I want to make sure that this is 100% value to you, because this is not my business. Training is not my business. Speaking is not my business. My business is giving clients financial planning advice, estate planning advice, working with family offices. That's my real business. Sharing my knowledge, sharing my experience, this is not my business. All the money from this goes to charity. This is not what I want to do on a daily basis, right? So I want to be very clear about the fact that this is me trying to give back to our profession. And guys, I want you all to think about one thing very important. What would you like to learn today that would help you achieve your goal in 2025? I want you to think about that. I want you to think about this. What would you like to learn today that will make 2025 your best year ever? Because if we can identify that one or two things that if you learn today will help you get 2020 achieve your target in 2025, I will try to ensure that I cover that in today's session. All right. Do you realize a lot of business owners are right now very overwhelmed with knowledge, with data, with artificial intelligence, with strategy? A lot of business owners don't know what to do. How many of you have realized that? I'm just reading all the comments that are there, so I'm just making sure that I can see every single comment that's coming out. All right, I'm gonna. You can download the PDF from the QR code. So there is a QR code on the screen which you can use to download the PDF from, or there's a link that has been put into all the chats on the comments. You can download the PDF from that. For those of you who haven't downloaded it yet. How many of you have realized that insurance policies are becoming bigger and bigger, and a lot of wealthy clients are buying insurance, but they're only buying it from experts. They're not just buying it from anybody. They're buying it from the right people. And now the question comes up, are you that right person? All right. So Deepa says how to close big deals. Bharat is saying right conversation with high net worth clients. Dimple is saying concepts. How do we work with concepts? Niaz has said something very interesting. In my country, people have said that insurance is a cheat. Um, so Niaz, you've said that twice. So let me kind of answer that question for everyone. Insurance as a business was designed to take money from you when you don't need it, so that when you need it, you're given it. And that's pretty much what insurance is. Insurance as a product was designed to take money when you don't need it and give it to you when you need it. I mean, that's what insurance was built for. That when things are going good, when everything is going fine, when everything looks good and things don't work out for you, insurance is your plan B. There are terms and conditions. And that's the reason why the simpler the product, the better it is. And guys, that's one thing that I always recommend advisors to look at. I always recommend you to look at the simpler products to understand. Products that are simple, easy, benefits are clear. It's very easy for clients to understand the pros and cons of those products. You see, our job is to make our clients' life easy, not difficult. So please don't promise things that don't exist. Please don't say the words guaranteed when the guarantees don't exist. If it's got the guarantees, it's got the guarantees. But if it doesn't have the guarantees, don't use those words. Be careful of your word choice. And I want you all to remember this. Clients forget what we tell them. How many of you have experienced this? I mean, if you have been in the business long enough, you will know this for a fact that clients forget what you tell them. Can we agree to that? How many of you have had that experience that clients forget what you have told them? And that's something that I want you all to understand, that if clients forget what you have told them, it's your responsibility to write down what you have told them, because they will forget. They will forget. You have to write it down. You have to write down what truly should your clients be doing. Give it to them in writing, um, so that they can review it, and put that as a part of your policy. I mean, how many of you write a letter to your client on why this policy was purchased? What is the objective of these policies? What are the things that they should be looking and should not be doing with these contracts? Write it down. It's fantastic when clients can look at a letter that you wrote 4 or 5 years into the future, right? Where they've written, Mr. Client, this policy was not for you. This policy was for your kids. It was for your parents. It was for your family. It was for your business. It was for your mortgage. What was the purpose of that contract? And what are the things that he should be doing and should not be doing with that policy? When was the last time you wrote a letter with your policies? I want you to think about this, because clients will forget. You see, clients, this is not their business. Don't expect them to remember things that you have said. People will forget. So I want you to get into the habit of writing down what you tell your clients. Make documents, write it down, guys. This is good practice. It's something that we're not trained on, but it's good practice. It's one of the best practices that we should be building when we are growing in this business. As you become older and older in this business, you will realize your clients forget things that you told them. I've been in this business 25 years. Some of the contracts are going back 25 years. Do you think clients remember what they decided 25 years ago? What are they supposed to do with that? When they finish their premium payment, what are they supposed to do after that? A lot of clients think that after they've finished their premium payment, they can cancel the contract, they can recover their money. But not all those contracts were designed to do that. Some of those contracts were just pay for a certain period of time and then they go on forever. Or pay for a certain period of time and then they will pay out after a certain duration of time. So our clients don't remember what they were purchasing. And that is reality. At that point of time, it made sense. And I remember this happening many years ago. I remember I was sitting with one of my clients 25 years ago. He had purchased one of the largest insurance policies at that point from me, which was $500,000. It was a very large policy, $500,000 of sum assured. And as we went through, that 500,000 became a million, that million became two, that two became five, that five has now become 10. And I was sitting with him yesterday and we were just reviewing, we were going back, and he was like, Sanjay, do you remember when $500,000 was so much money? That when I was buying that contract, I thought I've bought the biggest insurance policy. I don't need anything anymore. And today we're sitting together. I have almost $20 million of life insurance. And I still feel I don't have enough. Guys, I want you all to remember one thing. You will grow with your clients. That same client over the last 25 years has grown so much with me. We have grown together. And we are having conversations about life, about family, about politics, about economics, about so many other things on where we can collaborate. What can I do with him? What can I help him with? How can he grow his team? How can he make his team more efficient? He's asking for my ideas because he knows I meet with so many people. Guys, we are not just insurance advisors. We are advisors for so many things for our clients. And that's what makes us special. But if you are not becoming a specialist and you're still giving general advice, you will lose out to the specialists. And that's what I want to cover today. I really want to have that conversation with every single one of you today, because I truly believe we haven't had that conversation. There's one thing I have said, and I'm going to say that again, that as your knowledge increases, so does your income. You have to learn to invest in yourself. How many of you have spent time to study, to learn, to get mentored? I have 7 mentors in my life today. I'm not saying you should have one mentor, you should have multiple mentors. But the whole point is you need to learn to grow. And there's one thing I realized: meeting people is still the most productive way to grow in this business. It is not through social media, it's not through these kind of sessions. It's meeting people. Clients like to meet people. And we try to do a lot of things by SMS, we try to do a lot of things by email. Guys, if SMS and emails could sell, we don't need you. Insurance companies can send that out themselves. The fact remains that you need to meet people. Now, there are 4 specializations in our business. And these were the 4 that my father told me when I joined this business 25 years ago. Now, you can specialize in all 4 eventually, but you need to choose one at every given point of time, and you need to grow from there, right? So every specialization by itself is a specialization that can help you become successful. So there are 4 specializations. Write these down. For those of you who haven't written these down, write these down. Number 1, risk management. Number 2, asset management. Number 3, corporate financial planning. And number 4, family office management. All right. Let me repeat the 4: risk management, asset management, corporate financial planning, and family office management. So there are 4 specializations. Write these down. Now, how many of you have already chosen a specialization? Can you please write down, I've chosen a specialization? And could you write down which of these 4 specializations you have chosen? Guys, choose one: risk management, asset management, corporate financial planning, and family office management. Because I know after the session, you will not have the time to sit and choose. So let's spend some time today. I want you all today to choose a specialization for yourself. All right, Rajeshwaran says family office. Nalini says risk management. All right, guys, I want to know what would you choose? Zaidi says asset management. Angelina says risk management. Lewis says asset management. Okay, a lot of family office management. Joyce. Um, Rennie says something very honest. I am greedy and I don't know how to choose. I'm glad, guys, that is absolutely fine. And that's the reason why today's session is so important, because we are all greedy. We want to specialize in all 4, and that's a fact. Um, Dimple, retirement is a product, it is not a specialization. All right, risk management, asset management, family office management. Okay. Rachel says risk. By the way, it is absolutely okay to be greedy. There is nothing wrong with that. It's just that today I want you to choose one, because I'm going to run you through exactly what each one does and what's the purpose of each one. How many of you don't have a clue which one to choose? So can you say, I don't have a clue, so that I also know that you don't have a clue on what you really want to choose? That's fine. All right. Oh, I like this one. Helmi says risk management, but doesn't everyone specialize in risk management? All right, Mr. De Silva says Children Education Fund. Mr. De Silva, Children Education Fund is a product, it's not a specialization. All right, Steph, being honest, I don't have a clue. That's great. That's great. Jack says, I don't have a clue. Christina says, I don't have a clue. Christina, you and I have had that conversation many times. Rona says, no clue. All right. Farhan says, what's your suggestion? Estate planning. All right, estate planning is not a specialization. It is part of family office. All right. I don't have a clue. I don't have a clue. Depends upon my customer. And Jaspinder says, depends on my customer. Can you imagine you go to a doctor and the doctor says, I will choose my specialization based on your illness? How many of you would imagine that, right? You go to see a customer, you go to see a doctor, and the doctor says, depending on your illness, that will be my specialization for today. Uh, Xavier being honest, I don't have a clue, want to be part of everything. David says, I don't have a clue. Valerie says, I don't have a clue. All right. Um, some people are saying, aren't there a lot of already family office advisors? Guys, let me tell you something. There are not enough good financial planning advisors or insurance advisors or family office advisors in the world. And that's a fact. Insurance is one of the least competitive businesses in the world because people don't spend time to join this business as a profession. They join it by chance, by mistake. They had nothing else to do and they somehow entered into this profession, and that's the biggest problem that we have, but it's also the biggest opportunity. So our biggest problem is our biggest opportunity. The biggest problem, nobody chooses insurance as a profession. Can we agree? Insurance is not your first choice. You would rather have been doing something else. And that's what we realized, that insurance is not your first choice. So that's our biggest problem, that people don't join this business as a career. They join this as part-time, or they join it as a career of chance or by mistake. And that's our biggest opportunity. That is exactly what is our biggest opportunity. Our opportunity is that because advisors are not joining this business as a profession, they're not thinking of this as a career. For those of you who can specialize, build the right career system, build the right knowledge bank, build the right system, you will become successful. Spending time to study, learn, educate, be mentored is the future. If you truly want to become successful in this business, you need to have that. All right. Now let's talk about every single specialization. All right. So I'm going to start with the one that most of you are already probably doing, and that is risk management. You see, risk management is about identifying what are the risks that could affect whoever you meet. All right. So if you meet a family, you meet a business owner, whoever you meet a professional, your job is to design something called a risk map. How many of you have learned the concept of risk mapping? Please write, I do. Risk mapping. I want you to remember these. This word is very important in the world of risk management. It's called risk mapping, right? Can you please write that down? Risk mapping. All right. I want you to write this down, risk mapping. Now, how many of you don't know what is a risk map? Please, can you say, I don't? How many of you don't know what is a risk map? Okay. Nia says, I don't. Joel says, I don't. All right. Riskmatic? Not riskmatic, risk map. Mapping, risk mapping. I know the phrase, but I don't know what risk mapping is. All right, Bharat. Awesome. Lewis says, I don't. June says, I don't. All right. So let me tell you what risk mapping is. Risk mapping is identifying everything that can go wrong and we have to be prepared for. So everything that can go wrong and we need to be prepared for. Now, once you identify the risk, right, there are three things you can do with that risk. There are only three things you can do with risk. Number one, you can either find a way to manage that risk, right? So I'll give you a simple example. You're driving from your house to the airport. You're driving from your house to the airport. What are your risks? What are your risks? All right, let's write down. You're driving from the house to the airport. It's what we call an activity, right? You're driving from your house to the airport. What are the risks that you will have on the way? Let's write these down. What are the risks you will have on the way? Okay, so we can have an accident. Okay, we can have an accident. All right, so we got that. That's the easiest one, accident. What else? What else? Traffic. Yes, traffic. Fantastic. Okay, so we got accident, we got traffic. What else? What else? Flat tire. Fantastic. All right, we can have a flat tire. uh, okay, the risk of passing away while you're driving. Yeah, you can pass away while you're driving. You can have a heart attack. Yeah, okay. Okay, car breakdown. Yeah, car breakdown. Potholes. Yes, potholes. Fantastic. Potholes. Okay. All right. Potholes. You can have a tire puncture. Yes, you can run out of petrol. Yes, you can run out of petrol. Weather patterns. Yes, weather patterns. All right, enough. That's what we call risk mapping. We are identifying all the risks between driving from home and going to the airport. Now, all these risks, all these risks that we just identified, that's enough. All these risks that we just identified, how many of these you can avoid? How many of these you can prepare for? And how many of these can you actually handle? Think about it. Now, if you, for flat tire, don't we have an extra spare tire? Think about it. For a flat tire, we have an extra spare tire. For traffic jam, we now have GPS. We can check on Google Maps, we can check on Waze, all these technologies that will help us identify the right route to go from your house to the airport. And if there's a traffic jam, we can plan for it. Seat belts, accidents, airbags. Think about it. We have seat belts, we've got airbags. If your car breaks down, having a AAA service provider, right? Someone who can come and with helping you with the breakdown of the car. And all these are different risks. Not all of them need insurance. That's what I'm trying to explain to you. You have a lot of risks in your life. Not all risks need insurance. The only risk that need insurance is the risk you cannot manage and you cannot avoid, so you have to transfer. Please remember, there are only three things you can do with a risk. You can either manage it, you can avoid it, or you can insure it, or what we call transfer it. Insurance is a risk transfer product. Risk that you cannot manage, you cannot avoid, you transfer to an insurance company. That's what insurance is. Insurance is a risk transfer mechanism. And if you are in risk management, your job is to identify all the risks that a client could have and tell them, this is done, 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 this is done. You already have a spare tire, you already have seat belts, you already have an airbag, you've already got your GPS, you've already checked your fuel, you've already checked your battery, you've already checked your tire pressure, you've already check. Ah, ah, there are three risks that you need me for. There are three risks you need me for. You see, we can even check for weather. We can check for weather patterns. Risk that you cannot manage or you cannot avoid, you have to learn to transfer. And that is insurance. Guys, as a risk management specialist, your job is to do a risk map, all the things that can go wrong, and then tick off. Okay, this is managed, this is avoided, managed, avoid, manage, avoid, manage, avoid. We can avoid this, we can manage this, we can avoid this, we can manage this. We have all these tools that are available to us. But there are certain risks that you cannot manage, that you cannot avoid. You cannot avoid the risk of death. You cannot avoid the risk of illness. You cannot. It has to be transferred. We can't avoid it. We can't manage the risk of death. We cannot manage the risk of illness. We can't. We can't manage it. Rahul has asked a very interesting question. Which products fall under these four specializations? Guys, it doesn't matter which specialization you choose, the product does not change. It doesn't matter which specialization you choose, the product does not change. The utility, what you do with that product, will change. Please remember, hear my words very carefully. The product does not change. What changes is the way you use that product. Please listen to this very carefully. The product does not change. The way you use the product changes. The purpose of the product changes. Keep that in mind, right? So one of the most common products that we talk about in risk management is liability protection, asset protection. We talk about high net worth insurance architecture. How do you structure them properly? And when you put yourself as a specialist with risk management, you are now also putting yourself in that position of a professional. So I want you to think about that, right? Fantastic. Okay. Now, the next conversation is what we call asset management. Now, there's a big conflict between the word asset management, wealth management, and fund management. Write these three words down: asset management, wealth management, and fund management. Bharat has asked a question. Is life insurance the only product for all specializations? No, Bharat. Life insurance is a product that can be modified in different ways based on what you need to achieve. It's like saying, I have four wheels, I have a chassis. Now, that's what you have. That's life insurance. It's four wheels and a chassis. What you build on top of it, whether it's made by you, whether it's automatically made, it's available to everyone, depends on the way you design that car, right? For example, hybrid cars, it runs on gas, it runs on petrol as well as electric motors. An electric car only works on electricity and runs on electric motors. A gas car only works on gas. You can have a combination depending on what you would like to achieve, right? Um, People complain about electric cars not having enough distance that they can travel. So if you're doing a very long trip, you're worried that you will run out of battery, right? And that's why people prefer gas cars for very long trips. Or then people say, wait a second, why don't I use a hybrid car so I can use a combination of gas and electric? So I can use a combination of both, right? And that's where the problem comes, that which one should I choose? There are different purposes for different cars, right? And it's the same with our products. While our product is called insurance or life insurance, there are different versions of life insurance that can be used for different things. And you have got whole life, you have got ULIPs or ILPs, you have got VULs, you have got ULs, you have got term insurance. These are all fall under the life insurance category, but every product has a different purpose, right? So when you're talking about life insurance, when you're talking about all these different, when you say the word life insurance, it's a generic word for a product that protects you in case you pass away, period. However, there are different versions of that product, and that's where you as a specialist need to decide which product is used for what purpose, right? You decide which product is used for what purpose. So whether you're doing term insurance, you're doing ILPs or investment linked plans or what we call ULIPs in India, or you're doing a whole life or what we call a permanent life insurance, you're doing a UL, a universal life, or you're doing an IUL, an index universal life, or you're doing a VUL, a variable universal life. Do you see these are so many different products for exactly the same product category, which we call life insurance? And I hope that answers your question. Jaswinder, the good thing is if you haven't, by the way, guys, if you haven't been able to write down everything that I just said, don't worry. This session will be available online for the next 24 hours. So this will stay on the portal for about 24 hours because we are expecting a lot of people across all the different platforms to be able to watch this. If you are on Instagram, my team did tell you this. If you are on Instagram and there is a problem with the Instagram live, please do shift to a Facebook live or to the YouTube live, um, because that will help you kind of stay in touch. Instagram does have a constraint in terms of how long a session can be. So in case there is a lag or there is a drop off, please do remember that we're broadcasting across multiple channels, which is on Facebook, on YouTube, on Instagram, because I truly want this message to get out there that we as insurance professionals have to learn to specialize. And that's the reason why I want to spend this time with you to ensure that every single one of you can specialize going forward. All right. So let's come to the next one, which is asset management. Asset management is three words, right? It's either asset management, some people call it wealth management, some people call it fund management. But guys, let me make this very clear. Fund management specifically talks about funds. Wealth management talks specifically about liquid assets. And sometimes you might have a few non-liquid assets. But when you say the word asset management, you're talking about tangible as well as intangible assets, right? So asset management is not just about only tangible, but also intangible assets. So for example, knowledge, experience, um, your family. These are assets that you have to put a system around. So I want you to think about this. Asset management is not just about physical assets, but it's also about intangible assets, relationships, putting a value to these assets, experience, putting a value to that asset, IP, intellectual property. I want you to think about that. Asset management is actually very, very important, and very few people understand how insurance fits into an asset management structure. When was the last time you had insurance as an asset class instead of an expense? You see, one of the biggest challenges that we face is that insurance in the world of accounting is considered an expense on the income statement. So if you look at accounts and you look at any of the financial statement strategies, insurance premium is not considered an investment, it is considered as an expense. If you sit down with any accountant, you sit down with anyone in the world of accounts, they will tell you insurance premium is an expense. The cash value of your insurance policy, the cash value of your insurance policy can be deemed as an asset. So while insurance premium is an expense, the cash value in your policy can be considered as an asset. And when was the last time you used insurance as an asset class? How many people have used insurance, annuities, as an asset class? I want you to think about this. Annuities, one of the most undervalued products in our profession, has not been considered as an asset class when we are doing asset management. And that is something that a lot of people don't realize. That insurance is also an asset class. Think about it. You have investment linked products, or what we call ULIPs. They can do a lot of investment strategies from there. You can do a lot of asset management using those products. And I want you to remember this, that a lot of people don't realize that insurance is also an asset if you structure it correctly. If you structure it correctly, right? Coming to the third one, corporate financial planning. Corporations have a lot of responsibility They have responsibility of their staff, they have responsibility of their directors, they have responsibility of the future, and corporations usually outlive its founders. Now, a lot of corporations are what we call a living entity. How many of you have specialized in managing corporate financial planning? I want you to think about this. What truly makes a company special? Is it the products? Is it the R&D? Is it the people? Is it the strategy? Is it the board? Is it the CEO? What makes a company valuable? I want you to think about that. Can you please write down, just write down, what are the things that make a company valuable? Think about it. Guys, the reason why I'm doing this session and I'm spending so much time with you is because I want you all to understand. I need you all to think about these things. I need you to think about these things. What makes a company valuable? So Isaac says the people. Okay, what else? All right, so we got the people. What else? What else? The people, yes. The brand, yes, the brand. Okay, what else? People strategy, okay. Financial stability, that's what makes it valuable as well, okay. Stability, product, okay. Relationships, okay. CEO, R&D, yes, that's what I all said. Founders talent, yes. Profitability, yes. Goodwill, yes. So profitability, goodwill, product, yes. What else? System, yes. Structure. When you think about, when you think about satisfied customers, yes. Intellectual property, yes. Quality of service, yes. Okay, now let's come to corporate financial planning. We realize we've got so many things that make a company valuable. What is the corporate strategy to ensure that all these things that are valuable to us are protected? What is the strategy that we as a corporation will have to ensure that we can continue to stay valuable based on all these different criteria, whether it's people, whether it's R&D, whether it's financial stability, whether it's cash flow, whether it's our process, whether it's our system. What if tomorrow we have a system failure? What's our fallback? What if our CEO dies? What's our fallback? So our CEO, our different assets. And that's something that I realized. And I'm going to share you a very interesting story. And I want you all to think about yourself if you were in that position, right? So you have a beautiful company. All of you today have a beautiful company. You have a fantastic CEO. And that CEO is driving in a beautiful Rolls Royce. He's going to a meeting. And on the way, he has a car accident. And two things happen. The Rolls Royce is completely destroyed and the CEO passes away. Now the company has lost two assets. They've lost a beautiful Rolls Royce that was owned by the company, but they've also lost the CEO. Now let me ask you this question. Which one is insured? Which one is insured? And majority of the time, what we have realized is that the Rolls Royce is insured and not the CEO. Isn't that scary? That we have insured the Rolls Royce, but we have not insured the CEO. And now let me ask you another question. Which one is more difficult to replace? Which one is more difficult to replace? The Rolls Royce or the CEO? I want you to think about that. I want you to think about that. Guys, corporate financial planning is probably one of the most exciting specializations. But corporate financial planning comes with what we call cyclical cycles. You see, most corporate budgets are only made at the end of the year. So if the company doesn't have a budget, you have to wait till almost till the next year to get or become a part of their budget. Because corporate financial planning is based on budget allocation. Unless you're doing SME is a lot more faster. Medium enterprises are faster. But if you're working with large multinational companies, or you're working with international companies, they do have what we call a budgeting cycle. They go through a budget, and if you're not becoming a part of their budget for this year, you will become a part of their budget for next year. And you have to learn to seed for that budget for next year. So I want you all to think about this. If you want to become a specialist with corporate financial planning, you need a good 6 months headline, or what we call a head time, so that you've got time to establish credibility, you have time to establish or seed for budget requirements, because there's a budget allocation for these programs, right? End of service benefits, key man insurance, group medicals, group life, directors and officers liability, credit insurance. There are so many insurance products that fall under the spectrum of corporate financial planning. And that's what I'm trying to make you understand. I mean, things like even kidnap and ransom risk, right? So some companies even buy kidnap and ransom insurance for any kidnappings that might be happening at the corporate level, right? So things like that, product liability, because products, if there's a manufacturer's liability, they might have product liability insurance. Warranty insurance, because certain products come with certain warranties. So there's a warranty insurance. Now, while that has nothing to do with our specialization, there are other people that specialize in this area as well. And I want you to understand, they also fall in the world of insurance, but not in the world of life insurance. It falls under property and casualty. But you need to be aware of that, right? You need to be aware. So you might have to bring in other specialists to help you with that. And guys, if there's one thing you take away from today's session, I want you to take away the word collaboration. Not competition, collaboration. In our business, if you truly want to become successful, you have to learn to collaborate with other specialists. Whether those are lawyers, whether those are accountants, whether they are bankers, you have to learn to collaborate. You have to learn to collaborate with other insurance professionals, not just necessarily yourself. Because we ourselves cannot be everything to everyone. Let's understand that. We literally cannot be ourselves to everyone. So I want you to think about that. Does that make sense? Fantastic. Yep. All right. Now I'm going to talk about the last specialization today, and that is family office management. Family office management is what we call a relatively new specialization, because it's only existed for about just over 70 to 100 years. Because if you think about it, the concept of the word family office is what we call corporatization of a family. How does the family put a system for inheritance, for legacy, for investments, for security? And this usually works with a few families. There are not many families that can afford to have something called a family office. So family office management, while it looks very glamorous, everyone's talking about it, there is a very few number of clients that fall in the family office space, right? And that's why it's very important for you to understand that family offices are not just about how many families are there, etc. But it's also about how much wealth there is. What is the purpose of that wealth? Is it to be distributed? Is it to be managed? Is it to be inherited? Is it to be, what are you going to do with it? So family office management is a beast, but there are not too many families that fall in that category, So I know a lot of people tell me, Sanjay, I want to get into family offices. I want to manage family offices. But I want you to understand family offices come with a lot of family politics, uh, family drama. It comes with a lot of pulls and pushes. There's a lot of political things that happen inside the family. One person doesn't like the other. They don't like one form of investment. They don't like another form of investment. They have a council. They don't agree. They will have disputes. And we, as family office advisors, have to learn to mitigate these challenges. So, a lot of people tell me, Sanjay, I want to get into family offices. Guys, it's not as easy as it sounds, and it's not as big as a profession as it sounds, because there are only so many family offices that you can actually work with. Think about it. There are maybe what, 300, 400, maybe 500,000 family offices globally, multi jurisdictional, tax issues, legal issues, uh, multiple children, multiple families inside the family office, because you could have brothers and cousins and all of that. Division of family offices. How many of you learn or want to spend time learning how family offices divide? How do you manage division? There are so many things that come as a part of family. It's a great conversation starter, but it not might not be the specialization that you choose. However, if you're ready to learn, I'm willing to teach. I would love to teach. I'm willing to teach you every single of these specializations because they all have different purposes, different types of clients, different products. And I've spent 25 years learning all these different specializations. So one of you said, Sanjay, I'm greedy. So am I. I'm not saying I'm not greedy, but I need you to understand, if you're new in this profession, don't be greedy. Learn to specialize. Become one specialist, and then you can jump to another specialization, and then you can jump to another specialization. And you can learn all four. I'm not saying you can't, but give yourself time. Don't try to learn everything in one day. It doesn't happen, guys. It's not physically possible. I want you to think about that. Rome was not built in a day. It takes time. And it's the same in this profession. You have to learn to give it time. Choose one specialization today. So now, after you've heard all the four different specializations, right? Take 2 minutes. I want you all to just take 2 minutes. Just take 2 minutes. And I want you to write down which specialization would you like to take? Which specialization would you like to take? Has your answer changed? Has your perspective changed? And has your opportunity changed? I want you to rethink. I want you to rethink. Bharat has asked a question. Can I just be a general advisor? Absolutely, yes, Bharat. You can be a general advisor, but that is not a specialist. It's just like a doctor. You can be a GP, you can be a general practitioner. But the question is, do you want to be a GP? Do you want to be an oncologist, neurologist, urologist, uh, hematologist, endocrinologist? You've got so many specializations in the world of medicine. And we know one thing for sure, specialists always earn more than generalists. And that's a fact, it's a global fact. So I want you to rethink. Do you want to, can you stay a GP? Absolutely, yes. Guys, there's nothing wrong in being a GP. It's just that, remember this, you're not going to be called when things go really bad. They usually call a specialist. When it's a matter of life and death, you want to speak to a specialist. So I want you to think about that. I want you to think about that. Guys, while you're writing this down, we will take a quick 10-minute break because we do have guests who are coming into today's session. I have invited some of my mentees who have all got different specializations, and I want them to kind of give you an idea of why they chose a specialization, what's their strategy, because my mentees uh, have been doing extremely well. They have a lot of opportunity in front of them, and I want them to share with you what are they doing. Because a lot of people tell me, Sanjay, you're too far ahead of us. You're doing a lot of things. Can you please tell us what are the steps that you're taking? So I'm going to talk about every single step you need to take to get to a specialization. How did these mentees of mine choose a specialization? How did they find their target market? What are they doing? What is making them special? So, guys, I want you to spend some time on this. Spend some time. We're going to take a quick 10-minute break. Is it 10 minutes or is it 15 minutes, guys? Taking a 15-minute break. Nitesh, are you there? All right. We'll take a quick 15-minute break. That's what it is. Okay, so we'll take a quick 15-minute break and then we'll come back. Stay tuned, guys.
Introducing the 2025-2026 Big Case Closer Mentorship. Let me introduce the next 12-month Big Case Closer Mentorship journey and explain how it will work for you.
The Big Case Closer Mentorship is one of the most highly anticipated programs this year. And here's why. I've designed it for advisors who are ready to scale their business, close bigger cases, and become true wealth advisors to high net worth clients. This mentorship gives you access to exclusive financial strategies, including asset structuring, which is becoming a go-to approach for wealth management. Why did I design the Big Case Closer Mentorship? After spending 20 years in this industry and learning what truly works, I wanted to create a structured mentorship that would help advisors succeed in the modern financial landscape. The truth is that many advisors feel stuck with small cases and they feel they've hit a ceiling. And that's exactly why the Big Case Closer Mentorship program was designed to break through these barriers. I saw that most advisors lacked access to high-level strategies like asset structuring, the kind of strategies that help you stand out and close over $100,000 of cases or even seven-figure cases sizes. The goal is simple. I want to elevate our profession by producing more big case closers who are respected by clients and positioned as trusted wealth advisors. Who is this mentorship for? This program is designed for three types of advisors.
Number one, advisors who feel stuck closing small cases. You're doing okay. You're closing $1,000 to $5,000 policies. You're working hard but feel stuck. Deep down, you know you're not living up to your true potential. You want to break into that bigger conversations, command more respect, and be seen as a professional, not a peddler.
Number two, advisors who are All right. Okay, guys, I do want to introduce some of my mentees that are coming on. So, can we have the first panel come on? I'm going to ask my team to add them into the session. Hey, Divyandu, good to see you there. All right. Hey, Kaka, good to see you as well. Okay. And Jesse.
Oops. Ah,
All right. All right. Who can I not see? Um, Divyandu, can you hear me? Yes, no. Kaka, can you hear me? Yes.
yes.
Okay, perfect. Jesse, we still can't see you. We can see a beautiful.
Yes.
We can see a beautiful.
I think there are some technical issues that cannot show my face correctly.
Okay. The best way to get rid of that is to remove your virtual background. Uh, okay. So while Jesse is figuring that out, let me guys quickly introduce you to Dibyandu, Kaka, and Jesse. Um, Kaka has been a mentee of mine for a good about what 7, 8 years now. Kaka.
Yep, it
Yep.
yes.
8 years. Fantastic. Dib, you've been a mentee of mine for how long? Dibyandu, can you hear me? No. Okay. Dib, can you hear me? No. Dibyandu can't hear me well. All right. We can hear you typing, Dibyandu. All right, there you go. Jesse, we can see you.
Good.
Fantastic. All right, that was Dibyandu's echo. Right, Dib? Okay. You see, this is the fun with using technology, guys. Technology can have its own perks, benefits, and pros and cons. Pro, we've got people from 3 different countries sitting over here right now. Well, 4, including Dubai. So I'm currently in Dubai. Kaka is from Malaysia, but she has woken up in Chicago today. So Kaka is currently in Chicago. Jesse is in Hong Kong. And Dibyandu, while he's from India, does live in Singapore. And he's a licensed advisor in Singapore. Jesse, you've been a mentee of mine for what, 3 years now?
2 years.
Two
Two.
years, fantastic. 2 years, okay. And Dibyandu, I think, has been a mentee of mine for what, 2, 3 years as well? All right, Dibyandu will get on board. No worries. Now, before we start today's panel discussion, guys, I do want you all to answer one question. I want to ask this one question to all 3 of you, right? And that question is, what specialization have you chosen? So, Kaka, what's your specialization?
I'm still doing asset management, even until now, yeah.
You're still doing asset management. And when did you first choose asset management?
I think in 2020, when you first launched the specialization,
In
I think I was a
2020.
generalist, yeah, for many years. Then when you mentioned about specialization, then I think I really need to step up and choose in order to get more opportunity to open bigger cases.
Okay, so 2020 is when you chose asset management.
Asset
Okay.
management, right?
Jesse, what's your specialization?
Risk management.
Risk management. All right.
Risk
Divyandu,
management. Yes.
have you already got you? You're on mute. Yes, you're on mute. That's all right, guys. While Divyandu fixes his mute, whenever you fix that, Div, just say hi so we know you've logged in. Okay. Till then, Jesse and Kaka will continue to talk. All right. Now, tell me. Let me ask you this question, Jesse. Why did you choose risk management?
Because I will introduce a little bit of my background.
Please.
I'm growing up from my insurance family. My mom has been in this industry for over 30 years. So when I entered this industry 10 years ago, we have a good benefit of a very solid foundation of
Yeah.
clients. But the and then their second and third generation are coming in. So at this time, we need to face is the intergenerational risk management.
Mm,
And most of them, they are coming from multinational backgrounds,
yeah.
across the countries, they're living abroad, working abroad. So that comes different risks from different countries, not just the life protection. even their tax issues or their asset issue, legacy, estate planning. So
Yeah.
that's why that the specialization I'm choosing to helping them to face the different challenges when they're living in different world.
All right. So I want to ask a question to everyone that's watching today's video, whether you're on YouTube, whether you're on Facebook, or whether you're on Instagram. I do want you all to answer this one question for me. How many of you work with families that are international? How many of you work with families that are international? Divyandu, have you come on?
Can you hear me now?
Perfect. We can.
Perfect.
Much
Oh,
better.
great.
Absolutely. Fantastic.
Sometimes,
Well,
sometimes
um,
it happens with the internet connection.
yeah, don't worry about that. Dave, that
Right.
happens. That's why it's called technology. And
Right.
Jesse, you have cleared up as well. You were a little blurry, so I'm
Okay,
glad
now
you.
is everything fine?
Perfect.
Okay, great. Okay.
All right, Dib. While everyone is answering this question for me,
Mhm.
which is, guys, I did ask this question to everyone that's listening in today's session. How many of you are working with clients or families that are already international? So either their children or their parents or somebody is living outside their home country. So, for example, Indian families with beneficiaries across the world, Singaporean families with beneficiaries across the world, or businesses in different countries. How many of you are working with families that have got some international exposure? Can you just say, I am, so that I can kind of get that? This is a very, very important question because that's exactly what Jesse was talking about. Now, Dib, how long have you been a mentee of mine?
It's close to 4 years.
4 years.
Right.
Fantastic. So, Dib, what's your specialization?
Initially, I started with the asset management, and literally after that, I moved to 2 years for asset management. Then I moved to the risk management.
Fantastic. All right, guys, that's what I was trying to explain to you. It's okay to be greedy. It is okay to say, you know what, I want to go from asset management to risk management to corporate financial planning to family office management. It is okay to go from one to the next, but you have to choose one today first. And then after a couple of years, you can shift to another one. Remember, you have to establish the right foundation to becoming successful in this profession. And that's what Dib just did, right? He just told you he started with asset management and now he's with risk management. Dib, quick question. Why did you choose asset management first, and then when did you change to risk management, and why?
Okay, so when we are sitting with the clients, so normally we consolidate the assets. So their asset, not only when you're working with international clients, they have an asset in different countries as well. So as a
Yeah.
financial perspective, yeah, as an expert, when we are doing the asset management, we are taking the asset from throughout the portfolios, right? So when we
Yes.
understand that how we can manage the asset, and then I move to the risk management, how we can create the risk map for our clients. The risk map is very important for us, for us also, even for the clients also. Like there are many kind of risks that we can manage, we can avoid, and some of the risks, if we can't manage ourselves, we can transfer the risks to the insurance companies, and that's how we come from.
Guys, I want you to hear something very important that Divyandu just said. Do you see his choice of words is exactly the same choice of words that I said a couple of minutes ago? There are only three things you can do with risk. You can either manage it, avoid it, or transfer it. If there's one thing that we have to learn as professionals, we have to learn to use the same vocabulary and the same language. Because if you realize doctors, when they talk to other doctors, they use a language that we don't understand. Have you seen that? When lawyers talk to other lawyers, they speak a language that we don't understand. When engineers speak to other engineers, they speak a language we don't understand. Every profession has certain words that are important so that the community, our industry, our community can have that conversation at the same level. So when our clients hear these words, they understand that we have been through that process of learning, we have been through that process of choosing a specialization, and then it is easy to explain. So if they don't understand one of these words, we can explain the meaning of managing risk, avoiding risk, transferring risk, but you have to learn to speak the right language. And in our profession, that language is decided based on the kind of specialization you choose. Okay. Now, Dibyandu,
Yeah.
when you're doing risk mapping today, right? One of
Yeah.
the questions I did want to ask you is, how do you start that conversation? Because one of the questions that everyone's probably going to be asking is, Dibyandu, how do you start these conversations?
So before we start this conversation, so I'll suggest to everyone, we need to do the risk map for ourselves first.
Yeah.
So what is the one thing that, what is the one risk that we can't avoid? So if we ask this question ourselves, the same thing I will ask my client as well. What is the one risk that you can't avoid it now? So that's the conversation started from there. And
Fantastic. You're absolutely correct, Dev. A lot of people forget to do their own risk map. So they sit down with people and they talk about all the different risks, but they don't do their own, right? And that's the problem in our profession as well. The doctor doesn't trust his own medicine. So Divyandu, thank you for sharing that. It's a great strategy to start a conversation, guys. Mr. Client, or for example, let's say Jesse is your client, right? This is how you start that conversation. Hey, Jesse, I was just sitting down with my mentor and we were doing something called a risk map, and I was making my risk map. And I thought, wait a second, how many families have actually spent time to identify all the risks that could go wrong? Why don't I share my risk map with you? And you can see which risks you have that you can manage, that you can avoid, and the ones that
trust.
you should transfer, right? Sharing your risk map is probably one of the best sales strategy that a lot of people haven't done, right? Fantastic. Okay, I do want to ask this question to you, Kaka. How do you find your clients?
Actually, recently I find my clients from the estate planning. I think like why actually I choose asset management in the first place is that I think there's a lot of people out there, they still don't put insurance part of their asset classes. Like when it comes to like passing down their wealth to the next generations, insurance is never been the picture. And also I'm curious why they never actually thought of insurance not in the picture. Then I think one of the, like how do I actually get my client recently is that I go back to my existing client and I'm going to a lot of networking events.
Hmm.
And one of the actually question that come right to me is that, like there's so many wealthy people right now, wealthy family in the market. But there's one concern they have is that they realize that 70% of the wealthy family lose their wealth from the second generations. Even now, a lot of actually people have this
I
kind of
think you're a lot more optimistic than the actual numbers. When you say the word
it's more, I think
70%,
90, right? That's why I heard
it's
90.
way above 90, man. Almost 90%.
Exactly.
90% of the
It's
people
like,
lose their wealth by the second generation. Yes.
yeah, so they say, Kaka, this is your, I believe that this is your specialization, right? Because you keep talking about asset management, you keep talking about, like asset planning. So do you have any ideas that how actually to address this kind of issue? Maybe like you mentioned, 70% is very low, probably 80 to 90. But what can we do to make sure that our wealth does not stop at the second generations? And probably some people, they do not want to stop at the third generations.
Yeah.
I actually have this kind of like conversations that keep going on
Have
recently.
you? I'm sure you also get this objection, right? So, Kaka, I don't want to plan for my kids. I mean, let them figure it out themselves. I'm sure
Yes,
you're.
actually, yeah, some of them they mentioned that. Then I told them that not necessary is that you want to actually give money to the kids, but there's so many things you want to achieve. Probably you want to pass down to the charity organization. There's so many things you can impact. Not necessarily your children, can be other people as well. But I think one thing I always tell them, this thing is about estate planning, right?
I'm glad you
Yeah.
mentioned something very interesting, Kaka. So I'm going to repeat what you just said. Guys, if you listen to what Kaka just said, she said something very important. She said, if you're not planning to give the money to your kids, you might be thinking of doing it for charity. You might think of creating an impact in society. It's not necessary that you have to pass on your wealth to your children, but there is wealth, there is money. It will get distributed. The question is, who do you want it to go to? And if you don't put the right structure in place, that wealth will disappear. It will go to the wrong people. It'll get used incorrectly. Something will go wrong. Fantastic. Kaka, I'm going to stop you there, but I want Jesse, I want you to answer this question for me. What are the type of clients you look for uh, when you're looking or doing prospecting?
First of all, they have multinational backgrounds across the
Okay.
countries, and then they have a generations fund, especially for inheritance purpose. So
Wow.
usually I ask them three questions for first
Okay.
generation. What do you want to pass down to your next generation? When
Okay.
do you want to pass down? And who do you want to pass down? So
Okay.
these
Can
are
you repeat?
three.
Can you repeat the three questions because not everyone is writing as fast as you speak. Repeat the three questions.
Okay. First, I will ask the first generation the three questions. First, what do you want to pass down to your children? Maybe it's
What do
not your
you,
children.
so guys, write it down. What do you want to pass down? Okay, that's question number one. Question number two,
Second is, when do you want to pass down?
guys, write this down. When do you want to pass it down? Okay, and number three,
Number third is, what do you want to pass down?
no, that was question number one, right?
Oh, sorry. What, when, what, and then
How?
Who?
what is that? What's
Who?
the first one?
Who?
Who do you
Yes,
want to pass
who?
Yeah.
down? Yes. Who?
Who do you want to pass it down to? Guys,
Yeah.
this is the problem that happens, right? So, when you're thinking faster than you speak. And when I ask you to slow down your thought, we will end
Yes.
up jumping. And that's a very important thing. When you are practicing these conversations, if you keep practicing them again and again, the speed of your conversation is controlled by you, because you
Yes.
have learned a talent which is controlling your mind over your language. And that's exactly what Jesse is doing, right? I made her repeat it because that's exactly what I want all of you all to do. It's the what do you want to pass it down, when do you want to pass it down,
And
and
who?
who do you want to pass it down to? Three very important questions. Okay, so when they give you this answer, do they always have the answer to this question, or do they
No.
tell you, Jesse, I don't know what the hell to do about these?
No, they say I never thought about it. Or
Exactly.
I
Yeah.
will talk about it when time comes. But then
Okay.
when is the time? When's the best time? And then the next question, the fourth question I will follow in if they have an answer for me. How do you want to pass down? What
Okay.
method? What strategy? What tool you want to use?
All right. So, question number four. If you have the answer to these three questions, there is still a fourth question that Jesse asked, which is, how do you want to pass it down? All right. And Jesse, what if they also have a how, right? So, I have a trust, I have a foundation, I have a family office. Then what do you say?
But I will tell you, 99% of them, they don't have exactly answer.
You are absolutely correct. I'm so glad you said the number 99%, right? That number is very, very important.
Yes.
99% of people don't have the answer to these four questions. However, Jesse is also correct. 1% of the people have the answer to these four questions. 1% do. So there is a fifth question that I want you to add. For those of you who are working with that 1%, there is a fifth question. Why do you want them to inherit this wealth? All right?
Mm.
Why?
Yes. Why?
You have to give purpose to money. Money without purpose is wasted. Money with purpose is valuable. Write this down. Money without purpose is wasted, but money with purpose is extremely valuable, right? And that's why the why, the purpose, is the question that the 1% of the world talk about. So when I sit down with high net worth clients, guys, this is for all of you, right? And Jesse's embodied that. The what, the when, the
Who?
the
Who?
who, and then
How?
how,
Why?
and the why, right? So the first three questions is for 99% of the people. Okay. However, some of them will still have the answer to these three. You add the fourth question, which is the how.
How?
And then there's this very small segment of people that will tell you, I have a trust, I have this, I have that, I have the structure, I have that, I've got these advisors. You give them question
Why?
number five. Why? Ask them the purpose of money. I was sitting in a beautiful conference, and this, guys, is for all of you as well. I was sitting in this conference, which was only on family offices. And the first question that was asked by our moderator, why do you even have a family office? Why? Why do you need it? You don't need a family office. Not everyone needs a family office. So why do you have it? Or why are you thinking of having it? You might not even need it. So, guys, I want you all to understand this, that sometimes you don't even need it. And people do it because their friends are doing it, or it's become the fashion, and that's why everyone's doing it. But you might not even need it. So I want you all to remember this. The why is not important sometimes. And that is where the first three questions become very important. Kaka, I want to ask you this very important question. You have gone from being an MDRT to becoming a COT and then becoming a top of the table, right? So you've gone through that process of going MDRT to COT to TOT. What did you change to go from MDRT to COT to TOT? What did you change? Because you've had that experience.
Okay, I think how do I do my MDRT is more like on quantity. Those
Mhm.
days is like, like if you can close as many as cases possible, then the chances of you getting MDRT is very high.
Yeah.
And also come to my, okay, so back then when I was at MDRT, right, so I had this mindset as well. Being a generalist actually is not bad, right? Because you do everything. When you have that kind of mindset, right, means that when you do everything means that you get more business, you get more recommendation, right? So that's what I thought earlier on when I was MDRT. But when I wanted to actually jump to COT, I keep questioning myself is that, is it true or not? If let's say I'm not a specialist, can I even get a quality client or maybe client who wants to actually buy a bigger cases or maybe wants a better solution? That's why I start to understand when I was at MDRT, I get a getting recommendation, but the recommendation is not something that excite me. Like for example, like, I don't really like to sell medical card, to be honest. I mean, like it's not something that really excite me. But I keep getting recommendation on medical cards. Then if you don't feel excited, you don't actually share with passion. When you don't have your passion, you will not actually bring confidence. Then I start to understand like excitement will determine actually your confidence, and your confidence will determine how you close the case, will determine your closing. Then I start to understand that what kind of case that actually will excite me, will actually give me the confidence, and also will actually give me the passions to actually close a deal.
So your mindset helped you go from MDRT to COT.
Correct.
Right. Now, what helped you go from COT to TOT? What did you change?
Is okay, that's mindset. Second is the skill set. I think initially I do not know how to actually, like give advice on estate planning or legacy planning. It's more
Mm.
like income protection and also medical card, yes, income protection and probably education planning. Then when I want to actually move to TOT, then I know I have to play a bigger game, which is estate planning and also talk about legacy planning. That is when whereby my clients are talking about 100 million sum assured, which I never thought that someone will buy that much sum assured. I was like, huh? 100 million, are you sure? Then he said that we are talking about legacy planning, right? I will not leave like 10 million.
What's the
I
point
feel
of
that
leaving a 10 million legacy when you should be leaving a 100 million
exactly,
legacy?
yeah. So to
Guys,
us,
I
right,
want you to understand something. We're living in $1 trillion world, and a lot of people don't realize this.
yeah,
$1 million was the 20th century. As soon as you came into the 21st century, by the way, guys, we are 25 years in the 21st century, and we are still talking about the 1990s, the 1980s. Do you realize that? We're 25 years into the 21st century. We're living in $1 trillion world. We have got $1 trillion companies existing today. It's only a matter of time before the first $1 trillion individual will be disclosed to the world. They already exist, they are just not disclosed, right? We know that for a fact. So we're living in $1 trillion world. We're living with $1 billion companies and $1 trillion companies, and we are still discussing $1 million. And that's something that needs to change, is that mindset. Now, once you change that mindset, that's exactly what Kaka was mentioning. You have to change your mindset. And once you've established the mindset, it will push you to one level. But if you want to get to another level, you have to focus on establishing or building your skill set, right? So, Kaka, thank you very much for sharing that. Now, Divyandu, I'm going to ask you this
Yes,
question. You have been in MDRT for a long time. Now, what
right.
shifted you to get to COT? So, what did you do to get to that next level?
It's the bigger cases. It's a conversation that helps me to open the bigger cases, and it's very easy. Means when I did my first COT, it's actually helped the conversation of having a specialization. And when you talk with the business owners or some high net worth professionals, usually, so when you create some concept for them that create the wealth for them, that using our product or using our money, they can build even better. So
Yeah.
that's how it helps me to excel my MDRT to COT. And usually I don't work with many of them. Actually, I always focus on the quality clients and where I enjoy the
How
conversation.
many people do you reject? Guys, this is something that is a power statement. I'll tell you something. Please listen to what Divyandu just said. He doesn't work with everybody. One of the biggest challenges in our profession, or one of the biggest challenges you will face in our life, is making a decision who not to work with, right?
Yeah.
So Divyandu, how do you choose your clients and how do you reject clients? How do you do this?
This is one of the conversation that really learn from you how to say no to your clients. So, so this is very, it's really very. So what I did, we can't say client to no, because when I have the opportunity, I take this opportunity to meet with the clients, right? But the people I love to work with, I follow up with them very closely. So my transaction, my relationship start with after the sales, not the fact find in the beginning. And I do the fact find more once I close my first cases. So from there, right? So from there, and I understand that who are the people that I can work with, and I can do more for them. So that's the way that I really, in other way, I say no to them. That maybe I don't focus too much to them, and not following up properly to them. And that's how I learn from you that how to say no to your client. And even if I enjoy the conversation, I go deeper. But if I don't enjoy the conversation, then probably I drop it.
Guys, I want you all to listen to what Divyandu just said, and this is a fact. It's one of the best practices. Please don't work with people you don't like because you're going to have a lifetime commitment with these people. If you're not happy with them, you're not happy with the way they function, move on. Guys, you have to learn to move on, right? So just keep that in mind. Learn to move on. And the faster you move on, the happier you will be, right? The happier you will be. Jesse, I do want to ask you this question. You've been in MDRT for 4 years. You became a COT, then you became a TOT. Tell me, how did that journey happen? What did you do right? What did you change? How did you change? Because you joined the
Okay.
mentorship, you only joined my mentorship after you were already a TOT, correct?
Yes, that was my first TOT. Then I joined your
Correct.
mentorship, then continue
Correct.
to be TOT continuously for 2 years.
Good.
So
So I want
I
to ask
want
you
to do
this
a little bit
question. How did you go
promotion.
from MDRT to COT and then from COT to TOT?
Okay, for MDRT to COT, MDRT you can work a lot. You work hard, you can achieve MDRT. You can work
Mm,
100 pieces of cases a year, medical cases, whatever, as a generalist. You can achieve MDRT. But
yeah.
from MDRT to COT, it's a level of a different of your client circle that I'm working with.
Mm,
Okay, you can work triple times harder than as MDRT, but your time is limited. The only way you want to break through is to break through your client circle. How you
yeah.
selected yourself to become a specialist. Then you find certain circle of clients to help you to achieve that target. Then from COT to TOT, it's another different level. So a little bit different from myself. 2 years ago, I joined BCC. That
Yeah.
was open up my mindset. I learned a lot in here. A lot of different concepts I've never tried, and then you can collaborate with a lot of top advisors in the group. Right?
Yeah.
This is a collaboration. We cannot do everything by ourselves.
No,
So
we
you
can't.
specialize your expertise, but then give away to collaborate to work with other specialized people like here, Kaka or other countries. Because our high net worth people, they move around the world. They are
They
global
do.
citizens,
People
right?
don't
They,
realize how much our clients move, right, Jesse? I mean, literally.
yeah, they
I
have a
live in
different
Dubai, right?
passports.
They
Yeah,
have different pass. Exactly. I'm so glad you brought that up. It's what we call second citizenship. A lot of clients have multiple passports, multiple citizenships, right? People are moving businesses across jurisdictions. Um, and Jesse, you said something very, very important, which is if you want to move to the next level, you have to first change the way you think about the business, the way you present yourself. Um, Guys, when Jessie joined my mentorship, she was already a very successful practitioner. Please understand that it doesn't matter your level of success, you still need a mentor. I have 7 mentors even today, right? It is not a lot of people tell me, Sanjay, you are a mentor, but guys, before I became a mentor, I was a mentee. And by the way, till today, I'm a mentee to 7 different mentors because there are people who are always going to find a way to do things better. And if there is a better way to do it, I would love to learn it. And if I'm learning it, I would love to teach it. Because if you cannot teach something you learn, you haven't learned it well enough. And this is something I tell all my mentees. If you cannot teach it, you haven't learned it. So, guys, there is nothing wrong in becoming a professor, becoming a teacher, becoming a mentor. But if you cannot become a mentor, you cannot teach, you have not learned the strategy. Please remember that. So, guys, please learn to remember. Now, Before we get to this very important topic, I do want to ask you this question. If you are a new advisor today, right? So if you could go back in time, all three of you, if you could go back in time to the day you were joining this business, what's the one advice you would have given yourself if you had the opportunity to go back in time? So I'm going to start with Jesse. What's the one advice you would have given yourself if you were starting in this business today?
Embrace as a global mindset.
Embrace a
and
global mindset. All right. Could you
and
explain that? What do you
starting
mean?
your collaboration with the people that you like to work with. We are not just working in insurance. We are cross different industries. We need to learn every day. We need to move on every day. So I wish I could learn as much as I can. I like a sponge.
Yeah.
That's why Dr. Sandri is my role model. I see him like one of the hardest person working in the world. And
You're too
he's
kind.
generously giving away a lot of knowledge.
Guys,
I think all the
I
business
haven't
team
paid Jesse
members
to
do
say
that.
that. All right, Kaka, I'm going to ask you this question. If you had the opportunity to go back in time and give yourself one advice that you were starting today, what would that advice be?
Have to actually start collaborating as soon as possible. I think I would like to actually share this my personal experience. When I was MDIT back then, right, I treat like personal, like accountant, personal, private banker as my competitors those days. When somebody mentioned that, oh, my accountant say no, my private banker say no, must invest their money into the bank, all this kind of into their investment. I hated them so much, like why you are stealing my business, that kind of things. But that actually if I collaborate with them, I can get even bigger business. I have more opportunity if I work together with them. I shouldn't treat them as my competitors. I should have done that earlier on. Then I can see bigger and bigger cases back then, not just right
Okay,
now.
I'm gonna kind of give you a little guide, right? That Kaka just mentioned. I'm gonna give that to you as a guide. Every client of yours is going to have multiple advisors. They're going to have
Right.
accountants, they're going to have lawyers, they're going to have bankers, they're going to have investment professionals, they're going to have uh, counselors, life coaches, they're going to have psychologists, they're going to have career counselors for their children, for their family office, security counsel. They're going to have all these different advisors around them, right? You're going to be one of those advisors. Now, the question is, how good are you at collaborating with all these advisors that are around your client? Please remember one thing, you're not in competition. You're in a world of collaboration. You're here to help your client achieve whatever their dreams are, right?
Hmm.
In the most efficient manner. So it's not about our product, it's not about our advice, it's about your client wanting to achieve something and what's the most efficient manner, and you need to find where do you fit into that big puzzle, and you are one of the pieces. Please remember, you're not the puzzle, you're a piece of the puzzle. And that's how you present yourself. I always tell my clients, I'm one of the pieces for your puzzle. You're already doing everything correctly, you already got your ideas, you've already got your strategy. I might be that one piece that is missing to make sure everything works together. Right? So, guys, please remember that you are not the puzzle, you're a piece of the puzzle that your clients are trying to complete. Divyandu, what's
Yes.
one advice you would give to yourself when you just started in this business? Because you started in India and then you migrated to Singapore. Am I correct?
Right. So
So,
actually,
guys, for those of you who don't know this, Divyandu started the insurance practice in India and then he migrated to Singapore. By the way, that can happen in our career as well. We might start in one country and then migrate to another. That happens. That could happen. And Divyandu, that's the reason why I wanted you to be the last one to answer this question, because among the three of you, you're the only one that's actually moved to another country to continue the same profession. So, what's the one advice you would have given yourself when you were starting back in India?
talk to anyone and everyone.
Anyone and everyone. I think this is one of the least understood statements, right? So it's so easy to say it, right? Talk to anyone and everyone.
Okay.
Nobody does it. So Divya, tell me this. Why?
Okay. When I started this career, to be very honest, that I migrated to India to Singapore, So I
Yeah.
don't have the market, so I started to the scratch, right?
Yes.
So it's the same thing that I used to talk to every day with anyone, even the strangers, even in the road or anywhere, right? So started to do the cold calling, started to do the street prospecting, and some of the seminars, some of the events, some of the referrals, right? That how I started the market and
Yeah.
how I base my foundation, how I create my foundation from there. And now, if we talk about, so it took some time to create the foundation, but
Yeah.
after that, um, I found the market that the market I love to work with.
Yeah.
Mostly the professionals, mostly the like doctors, or even architecture, researchers, scientists, or business owners. So that is the
Guys,
second.
that
Yes.
is something that Divyandu said that I want you all to make a note of that. Talk to anyone and everyone. You see, he moved from India to Singapore. He moved to a place where people don't know him. He moved to a country where he doesn't have a network. And a lot of people tell me, Sanjay, I don't have a network. How do I start? Divyandu started the hard way. He started in a country, he restarted actually in a country with no network. He invested his time to get to know people. And guys, in this business, the one thing that you have to understand is, are you meeting enough people? Right? And if your calendar is not full, your confidence is low. And if your calendar is full, your confidence is high. Please remember these words. If your calendar is not full, your confidence is low. And if your calendar is full, your confidence is high. That's exactly what Kaka also said. Your confidence comes from excitement. Your excitement comes from doing something that makes you happy. Guys, so please remember these small tips. They've all given you these small tips, but these each tip can affect the way you affect that you grow in this business. Now, guys, if you had to choose another specialization, right? So this is going to be the last question. Uh, if you had to choose one specialization, um, what else would you choose? Because we are all greedy here, right? We all want to get every type of client. So let me start now with Divyandu. Divyandu, what's the specialization that you would choose next? So you did asset management, you did risk
Right.
management. What's the next one that you would want to do?
Next, I'll choose the family office.
You choose family office.
Right.
Okay. Why?
The reason behind I learned that asset management, how to manage the asset individual person,
Mhm.
and so this is very important when you are meeting with the clients. And after that, from the asset management to risk management, how I can manage the risk for the families, even for the business. So I more deep into the business owners, work with the business owners. I understand the language. I know how what they want to do, and how to build the trust, and how to be confident, means how to keep that sensitive, keep the confidential information
Yeah.
when you're talking with the business owners. And when I feel that I have these two specialization, I have already did it well. So why not I move to the family offices? Because this is the next step, that from business owner to I can move to the family offices, where I have the opportunity to build another one market from there. So that's I draw my map that how I can move from one specialization to another specialization.
Got it. Okay. Next question to Jesse. What's the specialization that you would choose?
Corporate financing
You would choose
specialist.
corporate finance. Okay. Why?
Yes. Because recent years, many entrepreneurs or business owners have been moving to Hong Kong from China, because Hong Kong is a very tax low city. So the
Yes.
way they move into here, they want to establish new business and saving tax. So lots of big companies have been starting a new business in Hong Kong, and then they are looking for this specialist in the market. How to set up key man insurance, how to set up group medical benefits, and then their strategy, their the a lot of things you can do with them. Even the MPF in Hong Kong.
Yeah.
So once you
Uh,
have to, you
by the
are
way, guys,
targeting
for
one.
those of you who don't know what MPF is, it's Provident Fund, right? Am I correct, Jesse?
Yes, it's
What's
one
M
of the
stand for?
mandatory.
Mandatory Provident Fund. Got it. MPF. Got it.
Yes,
Okay.
yes.
For those of you who don't know, this MPF is the Mandatory Provident Fund that's in Hong Kong, and there are certain investments you're allowed to do with that, or it has to go to the government. How's it?
Oh, you are allowed to choose. You are allowed to choose.
You're
Hong Kong
allowed
is
to choose.
very selective. They are free.
Fantastic. So, guys, you have to remember that there are jurisdictions that are where people are moving. There is wealth moving around the world at any given point of time. And if you can identify where that wealth is moving and why that wealth is moving, you might be the advisor that they come to, right? So, corporate financial planning is actually a very exciting subject. Unfortunately, let me give you the cons of corporate financial planning. For those of you who are thinking of corporate financial planning as a potential subject, it is very technical, right? It's a very technical expertise. You need to have the right guidance. You need to have, even corporate financial planning, there are multiple elements to it because you will be looking at corporate risk. Some of it might not be products that you have access to. So things like credit insurance, product liability, directors and officers insurance, kidnap and ransom insurance, group travel insurance. So there are multiple products that might not be available to you. So you might have to learn to collaborate with other advisors on that. That's number one. Number two is the technicalities. A lot of corporate financial planning could be based on corporate tax planning, right? So you have to learn to find out what are the tax codes that corporates have to use in your country or in the country of the corporation. And if they have subsidiaries in other countries, what happens? Because you have to remember, most corporations have got multiple subsidiaries, multiple holding companies, multiple layers. You have to go all the way up to the UBO now. So I'll just give you an example. I'm working on a corporate deal right now. I'm working on a corporate pension plan for a company that's in 9 different countries. Okay, so just I'm giving you a real case study, and this is Jesse. This is for you to learn. Uh, Family Trust is set up in Singapore. Their holding company is in Singapore. Their operating company is in Africa. Their banking is done in Dubai. Their family is based in Asia. Their beneficiaries are based in the US. Now, tell me, how many of you would be excited to work on this case?
Very excited.
Exactly. You see the technical nightmare that you have to go through to kind of get this right. So, while corporate financial planning is a fantastic choice, it is also technical, and there is a lot of work that goes into it. So, guys, you have to be ready to learn and you have to be ready to explore and do research. So, guys, you have to remember you have to be a perpetual researcher in our profession to become successful, right? And thank you for sharing that, Jesse. Kaka, I know you've been asset management for the longest time. If you had to choose any other specialization, which one would you choose?
Risk management. I think just now Dipianto mentioned about the risk management for individual, right? I'm actually doing a lot of risk mapping strategies for business owners. And I think it works so well. When you really plan that out, right? You really do a proper mapping strategy for them. Business risk that you can manage, which one business risk that you can avoid, and which business risk you want to transfer. Then they start understanding already that, oh, I need key man. Yeah, I don't have a proper succession planning. Start to actually come out one by one. It works very, very nicely in the way that the approach is very, very casual, but it's very impactful. And they don't feel like you're selling them something. You're just helping them to like just to bring it down all the risks that which ones that you want to avoid, manage, or which one you want to transfer. And you can actually start to understand that there's so many risks that they want to transfer. Because you see, business people, they're only thinking about profit. They don't think about like income protection or don't think about right? They're thinking about my business must be profitable for multiple generations. That's what they think about.
Kaka, you said something very interesting. Business owners are only thinking about profit. And I'll tell you something, while they are supposed to be thinking about employees and they're supposed to be thinking about all these other things, the truth is sometimes they're only thinking about profit. Guys, really appreciate your time. I know you've woken up really early in the morning, Kaka, to be here. Appreciate that. Divyandu, thank you for your time. Guys, I really appreciate you coming. Now, before we bring on the next panel and I ask you guys to leave, I do want to ask three of you one word, okay? Very difficult question. One word of advice that you would give to everyone that's watching you, because there are thousands of people that are watching you today. What's the one word you would tell all of them? Just one word.
Start.
Okay. Start. That's a good word. Jesse, one word.
As the focus.
Learning.
Learning. All right. So Divyandu said start.
No,
Jesse?
I said focus because
Focus. Oh, you said focus. Okay.
yeah.
All right. So Divyandu said focus. Jesse said learning. What's the one word, Kaka?
Heart.
Heart. Feel. All right.
Feel.
Guys, feel. Guys, thank you very much for your time. I think this was absolutely brilliant. Please, guys, if you have learned something new from today's session, uh, please do share it with everyone around you. If your friends are listening in, please do tell them to take a note of this. And guys, thank you very much for your time. I look forward to seeing all of you at the mastermind in Singapore next month. Thank you, guys. So I'll ask you guys to go. We have the second panel already waiting. So I'll bring them on now. Thanks, Kaka. Bye-bye. Thanks,
Thank
Jesse.
you.
Bye, Dave.
Thank you.
Thanks.
Thank you,
Bye.
Sanjay.
All right, guys. For those of you, till the next panel comes on, and I'll wait for them to all join in. Till then, guys, I want you all to start writing down notes, making sure that you've understood what you should have done. We do have our mastermind that's happening in September in Singapore. So that will be a 2-day mastermind that is happening in Singapore. And it's when I get to spend time with my mentees, just planning what their career should look like, because it's not just about planning for this year. It's about planning for your career. You're going to be in this business for a while, and you want to make sure that you've got the right foundation, the right structure, so that you can grow from there, right? Please remember, simple words get carried on, right? Hey, Katrina, good to see you there. Hey, Zia, nice to see you there. Hi, Loy. Okay, we can see Loy's laptop. Loy's going to come back. Loy's going to join in. All right. Katrina, where are you in the world right now?
My flight to Dubai is cancelled because of the typhoon, so I'm still in the Philippines.
Oh, Lord. Okay. All right. So,
Yeah.
for those of you who are in the Philippines and you're stuck in the typhoon, please be careful. Please be safe. That's very important. Katrina is from the Philippines. Zia from Malaysia. Zia, how's Malaysia doing?
Good.
Good. Okay, I like that.
Malaysia
One
is
word.
doing
Good. All right. Loy is joining in. I think Loy is having some technical difficulties. Let
Can you hear me? Can you hear me?
We can
Can you
hear
hear me?
you, Loy. We
Oh,
can
but
hear you.
I'm
Your
not
camera-
moving. I'm not moving.
You're not moving. No, you're not moving.
I'm not moving. What do I do? What do I
You've
do now?
got two choices. You can exit and come back,
Oh,
right? You can rejoin. That's
try.
always the best. 90% of the problems are solved by switch off and switch on.
I'm not moving.
Yeah, you're not moving. You're not moving for sure. So why don't you exit
Oh,
and come back?
oh.
All right.
How do I leave?
Don't worry. You can exit and come back. My team will help you on that. All right, Katrina. Before we start today's session, I do want to ask you, what's your specialization? Which is the one that you've chosen?
My specialization is family office.
Family
So
office.
Yes, I'm in the advisory board of Taiwan
You've been
Family
in
Office.
You've been in a
Across
mentoring program. How long now? How long you've been a mentee?
7 years.
7 years already. Wow, time flies.
Yes. So,
So Katrina is one of my mentees that has actually spent some time even with my mentor, right?
oh yes, all the way to the US to meet your
All
mentor.
the way to the US. So Katrina actually did get to meet with my mentor.
How do
We
I
ended up doing some
take
very
the video?
conversations. And Zia, you've been my mentee for how long now?
7 years as well.
Wow,
7
time
years.
flies, man. All right. I'm going to ask both of
Yes.
you this question. Time
Yeah.
flies. Time really flies. It's been 7 years. Okay, I want to ask both of you all a very important question. You've gone from MDRT to COT and now to TOT, Zia. What changed? What did you change? And what's your specialization that you've chosen now?
Asset
Asset
management.
management. Okay. And what changed from MDRT to COT to TOT? What changed?
I cannot move.
I think I really remember what Sanjay taught me, that you cannot serve two master, as in you cannot be doing two things if you really want to focus on one. So I've been always wanting to dive into a high net worth market, and at the same time I've been really stubborn that I felt like I have to do a lot of medical insurance policies. So I think at one point, Sanjay really did tell me that if you really want to specialize in one part, you have to dare to say
Stop
no.
moving.
Lloyd comes and goes because he's trying to get in with his non-moving camera. I think my team guys, if you could just tell Lloyd to restart his computer, that's probably where the problem is. So if you could just guide him on that, guys, thank you. So my team's listening in and they're trying to help out. Uh, Dia, what changed? You went on to choosing a higher net worth market, but what did you change in terms of strategy? So what changed from going? What's that one change that you made to go from MDRT to COT, and then achieving your TOT last year?
I think in one line, I would say instead of selling policy, I learned to give advice.
So you went from being a salesperson to becoming an advisor. I think that's one of the biggest
Yes.
changes that we as people in our profession need to learn is going from distribution or sales of product to becoming a real advisor.
Yes.
I think you hit the nail on the head by saying that. Katerina, you have been an MDRT for 5 years and now you've become a COT. What did you change to become a COT? You're on mute. Katerina, you're on mute.
So what changed from MDRT to COT was the language I used, because before I would focus on asset management, but I noticed that asset management and family office go together, and it's a lot easier to target family office because when you work with family offices, you're basically dealing with a smaller ecosystem of decision makers. Wealth management, I work with their lawyers, with their with their accountants, with their tax planners, even with their foundations for charity. Now, when you're in family office, the language changes. So I'm able to, when the language changed from an insurance perspective of wealth protection or wealth management tool, I was able to uh, veer or go into the area of cross-border planning. So a lot of the family offices that I work with now have businesses in different continents, not only different countries. So when you're able to talk to them in the language that not insurance people mention, like for example, when you talk to them about, instead of calling it life insurance, you use terms that they would understand, because they have a lot of liquidity blind spots that they don't know. They have a lot of risk exposure they're not aware of. And when you talk to them about tax friction as a family office, and these are languages that not all financial advisors understand and use, because most financial advisors, we all get the same level of training from our companies. So sometimes the disadvantage is when we talk to clients, it's like they're hearing the same kinds of people every time. But when you talk to them about tax friction, about cross-border risk transfer, about all of these things, they look at you as a strategist, not as a salesperson. And when I changed my language, I'm able to capture that level of market segment.
Guys, I want you to hear the choice of words that Katrina had in this, right? She said words that you need to all learn. Liquidity blind spots, right? Keywords, liquidity blind spots. A lot of people don't realize that they have liquidity blind spots. They always believe they have enough liquidity to do whatever they want. And when the problem comes, all of a sudden they are caught and they don't have the cash flow. I mean, you have met rich people who suddenly don't have money, correct? These are liquidity blind spots that they are not aware of, right? Guys, these are keywords that are important to become successful in this business. If you're not using the right keywords, you're not having the right conversations, right? Loy, I'm glad you're here.
I'm using a handphone, so you'll see the screen get compressed.
That's all right. As you're here, that's more important. So it's not about the screen, it's about you being here. Loy, what's your specialization?
I'm doing risk management.
Okay.
And
quick question, Loy, how long have you been a mentee of mine now?
okay, I want to take this opportunity to thank Dr. Sanjay because I joined him in 2019. Right, that was the first session at Learning Center. Then COVID came. Fortunately, I joined Dr. Sanjay. Seriously, I want to take this opportunity to announce publicly that I'm very thankful that I've been following him for the last 5, 6 years. And from MDRT, it gradually moved to COT, then a TOT. Okay,
Guys,
not that.
I want to acknowledge something very important publicly as well, because for those of you who don't know Loy is probably one of the most hardworking people I know. Now, a lot of people think that to become a TOT, you have to do a lot of big cases. Let me be very clear. Loy still focuses on doing a lot of cases. He's exceptionally hardworking. And that is something that I truly appreciate about Loy, because he has embodied hard work as a very important part of our business. And for a lot of people who don't know this, my first TOT was done by doing 400 cases. My first TOT was not big cases, it was a lot of small cases. And Loy has actually followed that same strategy. So I do want to make this very public that Loy is probably one of the most hardworking people I know. He has done a lot of cases, he does a lot of small cases, and he is focusing a lot on risk management. And while he has gone from MDRT to COT to TOT, Loy, I do want to ask you this question.
Yeah.
What did you change between going from MDRT? Because you see, you became an MDRT after you became a mentee of mine, and we've been there for the longest time. So
Yeah.
MDRT became your first target, then COT, and now you've done twice TOT. I did want to ask you, what's that one change that you made from MDRT to COT and then COT to TOT?
I guess after 4 MDRT, I was looking for mentors. So I went to the mountain. I saw Sanjay as my guru. So Sanjay accepted me, so he's my guru. Then from MDRT to TOT, right? Actually, try to reduce the like what Dibandu say. Do not take every cases. You have to be selective on the product you choose. Like medical, okay, medical I slow down because there's a lot of servicing matter. Then even group benefits, employees benefits, I try to be selective in the product first. After which, then I would select the client whom I want to work with.
Guys, I want you to hear this very carefully. You have the right to choose which product you distribute. You don't have to sell every product that your company manufactures. Please remember that while your company has got multiple products, it is not mandatory, nor is it compulsory that you have to distribute all the products. You can choose the products that you specialize in. It's just like when you go to the doctor has access to the entire pharmacy. It doesn't mean he gives all the medicines to the clients, right, or to their patients. They prescribe the ones that are suitable. So please remember that your company is manufacturing products. It's a pharmacy, right? You are the doctor that chooses which medicines are suitable, and not all medicines are suitable for everyone. Please remember that, right? There's not one medicine that fits all. Please remember that as well. So, Lloyd, thank you very much for sharing that. And guys, like I said, I do publicly want to also acknowledge Lloyd is extremely hardworking. It's not that Katrina and Zia are not, they are also very hardworking. But I do want everyone to know that while uh, Zia and Katrina are looking at choosing a higher net worth market, Lois still does a lot of mass market. The only change he made was he changed the product that he distributes. So he went from a product that is not his area of expertise to a product that today is his area of expertise, right? Guys, I do want to ask you this question. How do you start your conversations? Because that's one of the biggest challenges that advisors have, right? Is how to start their conversations. So, Zia, I'm going to start with you. When you meet someone, how do you really start your conversation?
I think I will really start the conversation with what interests the person. Yeah, I mean, like how did I actually get to a lot of my clients is that I learned to speak their language, as in what do they really want to talk about. So I catch their point of interest to get into what they are interested in, and then from there I will actually see how can I actually penetrate into their concern, and that's how I start the topic
All
with
right.
them.
So let's say today you're meeting with, I introduced you to Katrina, right? How would you start that conversation with Katrina today?
Mm-hmm. I'll get to know Katrina first. I will say, "Hi, Katrina. How have you been doing? I heard from Sanjay that you are very." The Katrina is actually like, who is she right now, or she's just a J?
It's a common friend, right? So one of the things that a lot of people have is they have a lot of common
Sorry,
friends.
my line is not.
Zia, is your network bad?
I cannot really hear you. Maybe I exit and come in again.
Yes, please. I think you're cracking up, so I can't hear you as well. Katerina, so till Zia comes back, let me ask you this question. How do you start a conversation?
I have two favorite questions because when I go outside the Philippines, people rarely know that I'm in insurance. They know me as an investor, and they don't know that I'm in the insurance business. So my two favorite questions to start a conversation: if I'm close enough to the person, or he or she was introduced by someone, I'm close. If there's a high level of borrowed trust, I usually ask them towards maybe 10-15 minutes in the conversation, what keeps them up at night. If you're a businessman, second question that I would always ask, especially if we're talking about business, is what's your favorite arbitrage? When I ask them that
Favorite-
question,
What's your favorite one?
what's your favorite arbitrage?
Arbitrage. Okay. All right.
And
Very interesting
when
question.
they explain that to me, when they explain that to me, that's when I realize, especially when you ask them, simple question, what keeps you up at night? And wealthy families and all of that. And I had this one client, a billionaire, owns an insurance company also. And I asked him that, and his answer surprisingly was my daughter's marriage. That's what keeps him up at night.
Mm.
And because of that question, I was able to realize one simple question, but I was able to realize that I, the next question I need to delve into is very well connected to relational due diligence. Like, what's the family dynamics? Why is he worried about his daughter's marriage? Those simple questions are very telling because billionaires don't talk about those things in a normal conversation. So when you ask them, like, what keeps you up at night? I wonder, you're a billionaire, you have everything in place, you have a very good business.
Katrina, your choice of words, I want everyone to listen to your choice of words. She just said these words: relationship due diligence. When was the last time you spent time to understand the relationship between parents and children, children and parents, husband and wife, mother and father, father and son, mother and daughter, mother and son? Relationship due diligence might be the weakest conversation or the weakest link in a financial plan. So while they might have all the financial stability that you expect them to have, what might be missing is relationship stability. Guys, please understand the words that Katrina just said: relationship due diligence. If you want to get in the family office space, it is not about financial stability, it is not about financial planning, it's not about estate planning. They have enough advisors around that. What truly is missing is relationship due diligence and relationship stability. Katrina, I'm so glad you brought this up because a lot of family office advisors are great with managing money. And she just said, this is a billionaire client who also owns an insurance company, right? So it's not that he doesn't understand insurance. He's a billionaire, so he's definitely not worried about financial stability. But what keeps him up at night is his daughter's marriage. Guys, I want you to listen to this case study very carefully because this tells you the opportunity that is exposed when you are working in the family office space. In the family office space, it is not about wealth, it's about emotional, relationship, spiritual contribution to society. All of that is where you have the opportunities because there's very few advisors that give advice on how to establish financially and relationship strategies, right? Katrina, thank you for bringing that. A lot of people don't realize that relationship due diligence is actually one of the key areas of work that all of us as advisors need to do. So I'm so glad you brought that up. Loy, how
Yeah.
do you start your conversations? Because you work hard, right?
Yeah, yeah. I think depends on the season of the year. So like towards year end, I'll do tax planning. So do you want to save tax? So that's a conversation starter. Then
Yeah.
or during Chinese New Year, do you want to have a red packet for your grandson? So these are depends on the season of the year. So you have different time for different starter.
So you have seasonal conversations. I love that one. Guys, I want you to pick up on this very unique tip, right? He has got seasonal conversation. So he uses the season to change his conversation, which is brilliant because technically you could establish concepts around a season, right? If it's the season for tax planning, and I'm sure in India you see that, right? A lot of tax planning advisors are focusing in that last quarter of the year because that's when a lot of tax work has to be done, and a lot of companies are finding ways to mitigate and reduce their tax liabilities, and identify the right structure that would allow them to do that so that they don't have to do tax evasion. It's more about tax planning. So tax does become a conversation usually in the last quarter of every year, and that becomes Loy's conversation. And in Chinese New Year, which is Q1, he talks a lot about ang pao, so red packets that you want to do or gifts that you want to give. And this would be very similar in India. We could do this around Diwali, because Diwali is the Indian New Year, just like how Chinese New Year. So you can do this at New Year around the month of December. If you are following the New Year cycle, you can do the Chinese New Year cycle, which is around the end of January, early February, or you can do it at Diwali, which is around October, November every year, right? So you've got these cycles, or what we call cyclical conversations. What are the season do you talk about, right? So, Law, you've got Chinese New Year, you've got tax planning. What are the other 2 quarters?
The other one with bonus season, right? Bonus, you can start with, do you want to enjoy your retirement or retire from enjoyment?
Ooh, harsh
Because-
words. Say those again.
Or do you want to retire your boss, or you want your boss to retire you?
Oh, do you want to retire your boss or do you want your boss to retire you? I'm telling you guys, sometimes these key phrases, right? These few words, your choice of words can have such strong impact on the people listening to you. By the way, guys, if you have missed out on any of the words that have been said, please remember you can rewatch this recording. It is going to be available to every single one of you, so you guys can replay this. But guys, do you realize that you can have seasonal conversations, right? All right, so I'm going to come back to Zia. Zia, conversation starters. How do you start your conversation? Uh, give us give us a sample or give us an example of how you would really start a conversation.
How I usually start the conversation, usually, if it's common friend, I will usually get to know from my friend, like, where have this person been? Like, usually, if this person has been traveling, so I will ask, like, I heard from Sanjay that you have been traveling. So you have been in France the past week. What is the most exciting trip? Well, what is the most exciting things about your trips? So I ask about the happiness of, like, the past 1-2 weeks of this person, and the person will usually share, like, what they actually enjoy and things like that. And actually from there, I will start to know, like, this person, the spending habit, and what is the priority of this person usually when they are traveling. And is there anything that they are actually concerned of when they are making certain decisions? So usually,
Have you ever helped a client make something called a travel fund?
yes,
Yes.
I think that is correct. So actually, that is one of the key points that I will usually go into. Like, I will know that how much this person will actually enjoy their travel patterns, their spending habits and all, and then I will slowly go into, like,
travel fund strategy.
correct, how I
Guys,
usually
there is
suggest.
something that a lot of people don't realize. In the 21st century, people love to travel, right? And we have the opportunity to travel. We have opportunity to travel today a lot more than any previous generation, right? But we don't have something called a travel fund.
Mm.
And I help a lot of my clients build something called a travel fund so that every year, right, they have the opportunity to do that one travel that they've always wanted to do. And we usually start with something called local travel, to regional travel, and then to international travel, right? So they first travel locally because they have a smaller budget, but they accumulate to have regional travels, and then they accumulate to do an international travel. How many of you, I'm going to ask this question to every single one of you that's watching. So we've got a few thousand people watching in today. I want to ask this question to all of you. How many of you would love to do a round the world trip? How many of you would like to do a round the world trip? So you want to go around the world, not in 80 days, but around the world. You want to really do a round the world trip. How many of you would like to do that? All right. So while some people are writing the answers, I do want to come back to Katrina there was one thing that you said in your speech, in your conversation that you just had, the word arbitrage, right? So, can you explain that a little bit? Because I think a lot of people want to understand what do you mean by arbitrage?
When you talk to business people about arbitrage, it's usually from the concept of what are the things that they like to take advantage of the most, where they give less, they only give or pay less, but they get a lot more of it. So it's basically in terms of family office or investment. When you talk about arbitrage, these are things that, in layman's terms, you get more than what you pay for.
Mm. Now,
So go ahead.
guys, I want you to hear these words very carefully. Instead of using the word insurance, right, or using the word annuity, where you pay lesser than what you get, right, instead of using these words, she uses the word arbitrage. Now, most business owners understand the word arbitrage. The word arbitrage basically means risk free profit, right? Write this down. The word arbitrage basically means risk free profit, which means you would have paid less than what you would receive, and it's almost risk free. That's the reason why it's called arbitrage. Insurance can be designed to behave like an arbitrage opportunity. So, insurance as a product can be designed to behave like an arbitrage opportunity because you will pay lesser than what you will receive. It always comes down to how you design the insurance product, right? Whether that's an annuity, whether that's a whole of life, whether that's an ILP, or investment linked plan, or ULIP, it doesn't matter which product it is. If you design it correctly, you have what we call arbitrage opportunities, right? And I'm glad, Katrina, you brought up that word because a lot of people don't realize that insurance can be used for arbitrage and therefore falls as a part of asset management. Any asset management, you have arbitrage funds, you have arbitrage strategies, you have arbitrage options, you've got arbitrage. Arbitrage basically means risk free profit. Insurance as a product is an arbitrage product if designed correctly, right? So if you design it properly, you design it correctly, you can design it to have arbitrage opportunities. And guys, these are key words. Please learn these words. They're very, very important. Guys, I do want to rewind a little bit, right? I want to rewind back to the same question that I asked the first panel. I want to ask all of you the same question. Lo, you've been in the business how long now?
I'm in for 21 years. So just to let you know, I'm a slow learner. It took me 13 years to achieve my first MDRT.
All right.
And
So well, the
13
good
years.
news is you're a learner. You know, the worst
Slow
is when
learner,
you're,
slow learner.
listen, Lois, slow learner is better than no learner. All right. I would rather learn slow than not learn at all. And that's the biggest mistake that I see, right? Is a lot of advisors have been in the business 20 plus years and they haven't even learned yet. Right. So don't, I mean, I'm glad you are a slow learner than no learner. Right. So that's fantastic. 21 years in the business. Zia, you've been in the business how long? 7, 8 years?
8 year now.
8 years, right? Katrina, you've been in the business how long?
13 years.
13 years. All right, guys, I want you to understand, I wanted you to rewind back, right? So if there was one advice you had to give yourself when you started this business, so if you were starting again today, right? Absolutely brand new, you are starting in this business today, and you have the opportunity to travel back in time, what's the advice you would give yourself? So I'm going to start with Katrina. What's the one advice you would give yourself?
I'll give myself two important pieces of advice. First is be more proud to be an insurance agent. When I was starting, I would always use the word financial advisor, or I would always feel the need to explain that I belong to a company that's already 200 plus years old. I would try to like build a lot of pedigree behind my title because the country where I'm from, people are so allergic to insurance. And I wasn't proud to be an insurance agent. You know, just for me not to lose my license, I would get policies for my children, for my mom, my husband, myself, because I wasn't proud of it. Because I remember sending someone a message to offer life insurance. And the person told me in vernacular, but translated in English, it meant that, oh, I didn't know you're only an insurance, you have like downgraded to become an insurance advisor. So when she told me that, I was like taken aback. And that's when I realized that's how they looked at us. And the second advice relating to that, the second advice I want to give myself is that it's not about me. Because the reason why I wanted to, like, instead of using insurance agent, use the word financial advisor, it sounds more prestigious, it sounds more fancy. But again, it's not about me. When you offer insurance to people and when you're there as an advisor to them, you're basically giving them a need, a service that initially they don't know they need it at first. And in any, whether I'm talking to a mass market client or a high level or a high net worth client, all of them just want three things. They want clarity, they want continuity, and they want control. I wish when I was starting, I knew those three C's, because I would beat around the bush like,
Katrina, repeat the three C's.
okay, that's clarity, continuity, and control. They
Okay,
wanted to
clarity,
like, what
continuity,
are
and control. All right,
yes.
Katrina, the reason why I asked that question was there is something that I do truly want everyone to listen to. You see, when you have been in this business long enough, there is one advice that I think every older advisor would give themselves if they were younger. Please be proud of our profession.
Yes.
The lack of pride is actually one of the reasons of failure. The lack of pride is actually one of the reasons for failure. There are days when things will go wrong. There are days when people will reject us. There are days when things will not be the way you expect them to be. Your pride at that point of time, your belief in your ability to help families, in your ability to give good advice, will truly allow you to stay in this profession. So, guys, that pride is actually very, very important. So, I'm glad Katrina brought that up, because that's one thing that I truly believe that we as advisors need is pride, is understanding that we are taking care of families that are not ours. We're taking care of businesses that are not ours. We're taking care of society that we are a part of, right? And the second advice that she gave herself was, it's not about me. Your commission is not your purpose, it's your mission, right? And when we say the word mission, it's not about you, it's about everyone around you. So I'm so glad, Katrina, you brought that up. And the three C's: clarity, what else?
Continuity.
Continuity
Oh,
and control, right? Guys, three C's that would affect or give great advice to yourself. All right, Loy, I'm going to ask you the same question. 21 years ago, if you were starting, what advice would you give yourself 21 years ago?
Look for Sanjay, look for a mentor.
Uh,
I need a
I,
mentor.
I think that is great advice to yourself. I mean, I'm blessed. I have a mentor who's been with me for 24 years. Um, I have multiple mentors, and I do agree with Loy on this one. If you are starting off in this business, please look for a mentor. It is a very important thing. It will allow you to speed up your process of learning. They will tell you the things, the mistakes they have made, so you don't repeat those mistakes. Uh, Always look for a mentor if you're
Right.
restarting. I do agree with you on that, Loy.
The
Uh,
second thing is try to be selective in who you work with. Like what DBN do say, be selective. You cannot be everything to everybody. And also choose the product that you enjoy working with, because the wrong customer will come back to you 20 years later.
Guys, you're going to be in this business for a very long time. Make sure you're choosing the right people to work with. You're choosing the product that you believe in. And I'll give you a rule of thumb. So I'll give you a best practice that will help you make that choice. Is this a product that you would want your children to buy? Please remember this. Is this a product you would want your children to buy? If yes, it's a good product. If no, don't distribute that product. Please remember one thing. If it's a product that you don't want your children to consume, then it's a product you don't want to sell. So, when a client comes to me and he says, Sanjay, I want to buy this insurance, I will tell them this straight out. You can buy it, but I wouldn't sell it, right? I don't want my kids to consume that product. I'm not going to give you advice to buy that product. So, guys, remember one thing: the best way to protect the industry, the best way to change our insurance manufacturers, to change the reinsurance market, because you have to remember, not everyone understand what the client wants. They make a product based on profitability, cost, benefit. in terms of distribution. Oh, there's been a demand for this. Just because there's a demand doesn't mean I have to satisfy it, because not all demands are good, right? Please remember that not all demands are good. Um, Sometimes mandatory, or I would say compulsive products might actually be better than flexible products. So I know a lot of clients say, Sanjay, I want flexibility. I said, listen, you are the worst person to get flexibility because you will abuse that flexibility, right? Not all flexible products are good, and not all rigid products are good, right? So you have to understand what type of client you're working with. Is this a client that truly needs the flexibility, or he's just abusing it, right? So please remember that just because you have the option to postpone your premium, is that good? Maybe not, right? Forcing someone to do something as a discipline might be more valuable than flexibility. And I'll give you a very simple example of that. A gym that forces you to come might be actually more beneficial to you than a gym that allows you to come whenever you like. Think about it. We all lack discipline for different things. Some of us lack financial discipline, some of us lack health discipline, some of us lack emotional discipline, some of us lack different disciplines, and discipline is important. Now, if you're a person that is very disciplined with your health, you will wake up in the morning and go to the gym. Flexibility might be good for you. But for someone like me, who will find every excuse in the world to not go to the gym, having a discipline, having a trainer that stands by me and says, no, you got to do this. Get up and go to the gym now. Get up and you come with me now, might be more beneficial than flexibility, right? So, guys, I want you to understand that not all flexibility is good, and not all rigid products are good. Depends on the type of client you're working with. Some clients need that rigid product where we have to force them to make their commitments. And there are some clients who are financially disciplined, and they might look for flexibility because they've got other potential financial obligations or financial arbitrage. I'm going to use that word, arbitrage, that they might want to explore, right? So keep that in mind, guys. Thank you very much for that, Loy. Appreciate that.
Thank
Zia,
you.
what advice would you give yourself if you went back 8 years ago?
I think I'm the lucky one here actually, because I actually met Sanjay on the first year of my career. And at the very, very beginning, I mean, like, I'm really lucky that I met Sanjay and had Sanjay as my mentor. I still remember my very first question to Sanjay is, if today I want to do as an advisor, what should I do? So actually, Sanjay gave me that one advice that I felt like it's still the best advice ever. He said that go get your first 100 customer first. And I think at that time I only have 10 clients and all. And Sanjay said, don't think, you just get your 100 customer. So I didn't choose, I didn't think, and I continue just hard work and get the first 100 customer. And I think from that progress, it actually taught me a lot. It actually taught me who do I actually want to work with, who I actually hate to work with, what specializations do I actually want to go into, and a lot of things that how do I actually get recommendations and all. I actually learned it all through when I get the first 100 customers in my first year. So I think that is a very, very important process that actually helps me to actually even excel on the very first year is because of because of this advice that actually Sanjay gave it to me.
So I'm going to repeat what Zia said in a more in the way and the perspective that I gave it to her. The problem is we all say I want to work with the type of clients I like to work with are ABC. And when you start working with those clients, all of a sudden you realize they're not, right? So one thing I always tell advisors, when you have your first 100 customers, right, you would have now figured out what are the real type of clients you like to work with. You would have realized which products you like. You would have realized which strategy you like. And that first 100 customers will allow you, the first 100 clients will allow you to identify what truly makes you happy in this business. Because while you want to choose the right customers, while you want to choose the right product, they might not be suitable for you. So just because you think it's right, it might not be suitable unless you've experienced it. So that's what Zia was trying to tell you. When you have just started in this business, your first 100 clients will give you an idea of what you should and should not do. right? So if you're just starting this business, you're a brand new advisor, my suggestion to you, get your first 100 clients. It will automatically tell you, this is what I like, this is what I don't like, this is what I love to wake up to, this is what I don't like to wake up to.
And
Right?
I think the second thing that I learned is that really listen to your mentor, because I think since the very beginning, Sanjay really did tell me that you have to pick your customer, and I actually I was reluctant. I was reluctant to actually say no to certain clients, and I think I learned through the hard way.
I remember that. You cannot say no. I know that for a fact, right? I'm going to
Yes.
tell this to all of you guys, right? Zia's biggest problem is she doesn't know how to say no, right? So she would help anyone and everyone. She's absolutely a very kind-hearted person, helps a lot of people, and that's the other problem, right? She doesn't know how to say no. Guys, you have to remember where you have to learn to say no, and you have to say, you know what? No, I'm not going to do this, and I'm done. You have to learn to say no. Zia, I'm so glad you said that. Thank you very much. Now, guys, I do want to come back to a very important question. If you had to choose another specialization, what would be the future specialization that you choose? So I'm going to start with Zia now, and then we go backwards. Zia, Loy, and then Katrina. Zia, what's the specialization that you would be choosing if you had to change today?
Family office.
Family offices, okay?
Mm-hmm.
Why?
I felt like I think Katrina said a very very important thing earlier, as in I think Katrina or the previous speaker actually said that you actually get to work with a smaller group of people that actually cut off a lot of decision making that is unnecessary throughout the whole planning, and it's only when you are there you are part of the advisory board and not just an agent. So that is the part that I'm actually looking to go into, as in more collaborations instead of competing with the other people that actually service the family.
Got it. All right. Loy, what's the specialization that you would change to if you
I
had?
will move into asset management.
Mm.
Even the customer, I have the mass affluence, so I think it's easier to move into income creation, consistent income,
Yeah.
or retirement market, because I look at the customer profile. Most of them are in their 40s and above. So I think that part of retirement or consistent income, income replacement, income creation. So that part, I think it will fit into the picture.
So one of the things that you have to do, guys, is also choose the specialization that you might choose might be based on the type of clients you're already working with. So if you have become like Loy, who's already got a client base, and you want to actually kind of find the right way to handle this client base, um, your specialization might depend on that, right? And it's something that he's excited about. So every time I sat down with Loy always tells me this, Sanjay, I love the retirement market. I love doing retirement planning. And if you sit down with Loy, he will always talk about taxes, retirement. It is something that he's passionate about, right? And I've always spoken to Loy about that. And I kind of understand why you would choose asset management, because retirement planning is a part of asset management. The way you manage your assets will affect your retirement income, your income stream, guarantees, variability, etc. And I understand why you would choose asset management. Katrina, you are already doing family office. If you had to choose another specialization, which one would that be?
Because these family offices have a lot of companies, I want to venture into corporate financial planning, because in Asia Pacific alone, in the next 10 years, we're looking at $5.8 trillion of wealth transfer.
Wow.
5.8 trillion, Asia Pacific alone. If you're a financial advisor and you're just practicing in your country, you have to know how to capitalize on that, because I'm not a TOT in the Philippines, but I closed an insurance premium of $10 million because I work with insurance brokers in the Asia Pacific region. We have what we call a dynasty trust. We don't call it an estate plan for high level people. We call it a dynasty trust. And I work with trust companies like JP Morgan Private Trust in Singapore. We have the DBS Trust services in Singapore. I close multi-million insurance premiums because, again, it's not about me. My purpose is not about being TOT or being multi-awarded, but I want to work with structures that will help these families. And I realize that corporate financial planning is one niche I want to venture into, because, like what I said, even if you just capture 1% of that $5.8 trillion wealth transfer in Asia Pacific. So if
That's
you're just
five hundred.
thinking your
That's
country,
$580 million, right? You know, a lot of
Francis,
people don't realize how many zeros are there in a trillion.
oh my goodness,
Uh, yeah, but
5.8 trillion,
that's
So,
$580 million in premium that Katrina is talking about. Guys, I
thank
want you to hear the words that Katrina just said, that our business is not about competing, it's about collaborating. So she has collaborated with other advisors. We are living in a very global market today, and you have to learn to understand that our clients are becoming international. Now, while we have MDRT, COT, TOT as a standard, right? That standard is a personal standard. We are choosing what standard we want to work towards. And every single one of you has the opportunity to grow above that standard. Like today, for example, when I'm doing 327 TOT, I'm doing one TOT every day. That's a personal standard that I'm trying to challenge myself on, right? So while Katrina is not, and I'm glad she brought this up, because these are global standards. And the question is, how many times of that standard are you trying to achieve? Guys, you have to learn to understand that we have to challenge ourselves. We have to grow. Katrina today is doing global business, while Zia is working only in Malaysia, Lo is working only in Singapore. Katrina is working globally. I work globally, right? So we're all working in different markets. We've got different types of clients. And that's one thing that I want all of you all to understand. Now, before we end the session, right, guys, I do want to ask all of you this other question. And this is a question that I asked the previous panel as well. So I'm going to ask the same to all three of you. What is the one word of advice you would give to everyone that's listening? Just one word. Take a few seconds. One word of advice, just one word, right? That you would give to everyone that's listening to you today. Um, so I'm going to start with Katrina. One word that you would give to, that you would tell everyone.
one word,
Yeah, one
dominate.
word. One word. Just one word.
Dominate. That's it.
Dominate. All right. Very powerful word, guys. Listen to this very carefully. Dominate. Loy, what's the one word?
Hunger.
Hunger.
Yeah.
Please do not lose your hunger. I've written a whole chapter um, on in my family office group on how to build something called artificial hunger. One of the biggest challenges we are seeing in the world of wealth is that when you're born into privilege, you're not hungry. You're born into privilege. You already have money, but it is the hunger that made you successful. So, how do I ensure that my children are hungry in the future? And what should that hunger be? Because that hunger cannot just be about ambition and wealth, that hunger has to be purposeful. So, we built something called artificial hunger. I've written a whole chapter on that. It's not been published for a very simple reason. This was only for the family office group. So those of you who are in the family office mentoring program, the family office group will get access to this, because this is specifically something I wrote for the family office. How do you build artificial hunger? So I'm glad you said that word. So Katrina, dominate. Loy, hunger. Zia, what's your one word?
Intentional.
Intentional. I'm so glad you said that. Guys, our business success is intentional. It is not chance. It is intentional. Guys, I truly appreciate you taking the time to share this with the world. Uh, as professionals, it's our duty to share our best practices, and I really appreciate you sharing your best practices with everyone. Um, Thank you very much for your time. And guys, so while Katrina, Zia, Lloyd, thank you very much. I'll
Thank
let
you
you.
very much. Thank you.
Thank you for taking the time to be with us today. I think this was absolutely fantastic.
Thank you.
Thank you,
Thank you.
guys. Thank you very much. All right, so you guys can head out, guys. Before we continue the session, because now I do want to spend some time to take some question and answers. We're going to take a quick 10-minute break, because I think we just need to kind of collect all the questions. So my team is collecting all the questions. So we're going to take a quick 10-minute break, and we will come back and we will handle Q&A. So I do want to answer any questions you might have, problems you might be facing, and Nitesh is going to help me with that. So he's going to collect all the questions so that we can have a conversation on that. Perfect. So just give us a quick 10-minute break so that we can collect all the questions. If you do have a question, please put them out in the chat box so that my team can collect it and we can have that conversation.
Absolutely. So thank you, Dr. Sanjay. Thank you, all the speakers. We'll be back in 10 minutes. And just a quick one for you who want to register for the Big Case Closer program, Big Case Closer Mentorship, please use the barcode somewhere on the screen, and there's only limited spots for you to sign up. We'll see you after 10 sessions, after 10 minutes.
(2025-2026) Big Case Closer Mentorship. Let me introduce the next 12-month Big Case Closer mentorship journey and explain how it will work for you.
The Big Case Closer Mentorship is one of the most highly anticipated programs this year, and here's why. I have designed it for advisors who are ready to scale their business, close bigger cases, and become true wealth advisors to high net worth clients. This mentorship gives you access to exclusive financial strategies, including asset structuring, which is becoming a go-to approach for wealth management. Why did I design the Big Case Closer Mentorship? After spending 20 years in this industry and learning what truly works, I wanted to create a structured mentorship that would help advisors succeed in the modern financial landscape. The truth is that many advisors feel stuck with small cases and they feel they've hit a ceiling. And that's exactly why the Big Case Closer Mentorship program was designed to break through these barriers. I saw that most advisors lacked access to high-level strategies like asset structuring, the kind of strategies that help you stand out and close over $100,000 of cases or even seven-figure cases sizes. The goal is simple. I want to elevate our profession by producing more big case closers who are respected by clients and positioned as trusted wealth advisors. Who is this mentorship for? This program is designed for three types of advisors.
Number one, advisors who feel stuck closing small cases. You're doing okay. You're closing $1,000 to $5,000 policies. You're working hard but feel stuck. Deep down, you know you're not living up to your true potential. You want to break into that bigger conversations, command more respect, and be seen as a professional, not a peddler.
Number two, advisors who are already closing big cases but want to scale. If you have closed big cases before but want to take it further, maybe even open cases that are $1 million range, I'll guide you with the latest techniques and the advanced structured strategies to consistently close ultra large cases. Number three, advisors interested in mastering asset structuring. This mentorship provides exclusive first-hand access to the latest asset structuring strategies. Whether you have already dabbled or you're completely new to it, I'll show you how to use it to close bigger deals, protect your clients' wealth, and make yourself indispensable to these high net worth individuals. What will you learn in 2025 Big Case Closer Mentorship? After coaching over 1,000 advisors over the last 5 years, I've refined a tested and proven roadmap that helps advisors enter the high net worth market and master big case closing. Here's a breakdown of what you can expect. Phase number one, building your sales foundation and skill set. When you first join the mentorship, you'll gain access to the Big Case Closer library, a comprehensive set of videos covering everything you need to know about closing cases of over $100,000. These are exclusive insights that I've collected over the last 20 years, which I've invested millions of dollars to acquire. You'll get curated videos based on your current skill set, helping you focus on the areas you need to improve most. This library will help solidify your foundation and start seeing immediate improvements in your commissions. Phase number two, acquiring the latest financial strategies. You'll also get access to the monthly workshops where I teach the latest financial strategies and asset structuring techniques. I'll show you what's working in 2025, and you can copy and adapt these strategies to your business. As the financial landscape is shifting, it's important to stay updated, and I'll help you leverage these changes to your advantage. Phase number three, exclusive mastermind sessions and offline meetups. In addition to online learning, you'll be invited to the offline mastermind sessions. We're organizing a 2-day high net worth mastermind in Singapore where you'll spend time with me and other top advisors learning how to apply advanced strategies in real time. These sessions provide the opportunity to network with other big case closers, share their experiences, and refine your approach. Phase number four, entering your insurance specialization.
Let's be honest, Trying to do everything for everyone just doesn't work anymore. Clients are getting smarter and they want to work with someone who truly understands their world. That's why I'll guide you into a specialized insurance niche that aligns with your strengths, helping you stand out from other advisors and stay relevant in the market where estate planning, tax efficient structures, or working with family-owned businesses. Specializations will help you open bigger cases and attract higher quality clients. You will even learn how to write a profile that positions you differently.
Phase number 5, leveraging the big case closer support system. After you start opening bigger cases, you may encounter challenges like complex client needs, tricky negotiations, or situations where you feel stuck. That's why you will have access to my big case closer support system, which includes my team and the resources that are available to help you whenever needed. You'll never lose a potential case because you don't know the next step. We have built a system to ensure you can leverage all the support you need and close all the deals confidently.
What's something new that's coming for the BCC program? First, and one of the most exciting things we have just launched recently is the X7 Pro. Built exclusively for BCC members, this isn't the same as the X7 sales cycle tool from ASC, or X7 Pro is my clone, trained with my actual framework, strategies, and daily to use client scripts. From concept presentation to handling objections and role-playing high net worth conversations. It's like having me in your pocket. If you've been thinking about entering the high net worth space, everything you need is already here. The only thing left is to start. We are also working on something incredibly exciting for the next 12 months that I can't wait to share with you. The BCC country chapters. This is a brand new initiative where Big Case Closer members will have the opportunity to host their own local meetups and mastermind sessions. Here's why this is a game changer.
As a financial advisor, I can sometimes feel that I'm isolated. We are consistently hustling to close cases, and while we have the tools and strategies, we might start to feel that we're navigating this whole journey alone. The BCC country chapter aims to fix this by creating a local community of like-minded advisors, offering a platform to discuss winning strategies, brainstorm solutions, and collaborate on opportunities in real time. Imagine meeting up with top advisors in your region, sharing what's working, learning what's new, and getting actionable insight you can use right away. It's like having your own mini mastermind where support and knowledge of your peers helps you stay ahead of the curve. The benefit goes beyond knowledge sharing. It's about building relationships, expanding your network, and having a go-to group for ongoing support, feedback, and motivation. For example, you could walk into some of these local chapter meetings, share a case you're working on, and leave with new ideas on how to approach that client, a fresh structure for the deal, or even a connection that could help you close that case. These sessions aren't just about learning, they're about taking immediate action and seeing results. While we're still refining the concept, be rest assured, if you're part of the Big Case Closer family, you'll be the first to know about this idea as it develops. This is your chance to tap into a powerful, localized support system that can fast-track your growth and success. The value of the program. When you look back at the journey I took, traveling the world to meet mentors, spending years testing and refining strategies, and investing over $2 million, if not more, into acquiring this knowledge that I'm sharing with you, it's easy to say that the mentorship is worth well over $100,000. But here's the truth. Even if you had that money, you wouldn't be able to buy this knowledge anywhere else. This isn't something you just pick up in a course or in a textbook. It's 20 years of first-hand experience with high-net-worth clients, refined through countless real-world applications.
When I first started the Big Case Closer family in the late 2019, many advisors doubted the concept of closing bigger cases. Many felt that it was impossible and they require huge talent or a rich network to succeed. But let some of these amazing results we've gotten change your mind about it. We've seen members who have had no rich connections opening up and closing large retirement planning and premium financing cases, some even in millions of dollars of premium. We have seen members who have stagnated in their career for years, clearing their 2020 target production in the first quarter of 2021 and are right now on track to doing the same in 2022. We have even seen new members who joined the program closing cases that are 200% larger than they used to do previously, just by tweaking and implementing new high net worth strategies. And the list goes on. But among these members, I'm super proud that 13 of them have shown the world that it is possible to achieve MDRT with one case and were awarded the Big Case Closer Award.
Hi everyone, my name is Katalam and I'm from Malaysia. Today I would like to share with all of you about the Big Case Closer program by Dr. Sanjay Tolani. The reason why I joined the Big Case Closer program is because I was looking for a breakthrough for myself, and at the same time I faced challenges when it comes to closing big cases. Initially, I never believed that closing big cases is possible for me. But after joining the Big Case Closer program, my perspective about financial planning has changed. Dr. Sanjay taught me advanced concepts which were made so simple to understand, not just for the advisor, but even for the clients. Dr. Sanjay always reminds me to not complicate my presentation because simple concepts will always have a bigger impact. Besides that, he also guided me step by step through the whole process with a case studies. From there, it made me realize that closing big cases is not just about the case size, but it's more about the problem they have. My client will usually face a bigger problem when they need a bigger coverage. This program has helped me to achieve my first TOT last year, and also it has given me more confidence in providing the best insurance planning for the high net worth individuals. At the same time, it gives myself chance to help them to do a precision planning and make them realize that regardless how wealthy they are, their financial portfolio will never be balanced without insurance. Looking forward to learn more strategies, and thank you so much Dr. Sanjay for this amazing program.
Hello everybody, my name is Benedict and I'm from Singapore. The reason why I joined the BCC program 2 years ago was because I needed to have a breakthrough in my career. Before joining the insurance industry, I was a relationship manager in a bank. Back then, I was very used to present numbers as well as diagrams to my clients. Those presentations were very complicated and many of my clients did not understand what I was saying. Through the BCC program and Sanjay's teaching, I was able to apply case studies as well as concepts into my presentation to make it very simple for my clients and friends to understand. By applying what I've learned in the BCC program, I was able to achieve one MDRT in one case in 2021 as well as 2020. How do I do it? Many of you have been asking me on social media. Well, it really is that simple. Learning the concept presentation and case study actually helps me simplify my entire presentation. By simplifying it, I was able to look into the problems more deeply and my clients could understand them better. So gone are the complicated presentation and numbers that actually boils down. Thank you Sanjay for teaching us, everyone here in the BCC program, how to get it done. I'm looking forward to 2022 to learn more from you. Thank you.
Hi everybody, I'm Portia Leung from Hong Kong. I have been in financial business for 21 years. Along this long journey, the way to run my business is almost the same every year. Production is the same, and the way to give advices to my clients are the same. I find it difficult to give a better solution to my clients, especially the high net worth one. The reason why I joined BCC program is because I was looking for a breakthrough and I want to upgrade my professionals to a high net worth level. Unlike the other courses that I normally take, BCC program really told me the strategy how to upgrade my client market to high net worth step by step. Starting from prospecting, create conversations, concept presentation, and even closing big cases. The concepts I learned are down to the earth and easy to understand. Clients always found it really inspiring and was identifying their problem more easy. I can provide the best solution to them, and closing ratio has increased much. I believe one case, one MDRT is not a legend anymore, and everyone can get it. Thank you, Dr. Sanjay, to provide this amazing program to build my confidence and good foundations to be the best financial planner.
I've dedicated over 20 years to perfecting these strategies, and now I'm ready to share them with a select group of advisors in 2025. This is your opportunity to join an elite circle of financial professionals, learn how to close six-figure cases, and start earning the kind of commissions that will change your life. If you're ready to take your career to the next level, don't wait. Sign up now before the slots are filled up, and let's work together to closing bigger cases in 2025. I look forward to seeing you in the Big Case Closer Mentorship and helping you achieve the results you've always dreamed of. Together, let's close some bigger cases.
All right.
All right. Yes, Nitesh, tell me, what are the questions that we have?
Okay, we have several questions. Let's start with the first one. Dr. Sanjay, how are people able to do international businesses? I'm in Philippines. We are only able to allow to
That's
serve
right.
inside
So,
the country.
guys, I want you all to understand something, that while you are based in a particular country, you do have the opportunity to work with nationals of that same country. So, for example, if you are a Filipino, you are allowed to work with OFWs, you're allowed to work with overseas Filipino workers that do come back to the Philippines. So that's how I started doing international business. I initially started by working with all the people that I'm allowed to sell to. So if you're an Indian living in India, you're allowed to work with NRIs. If you're a Filipino living in the Philippines or working in the Philippines, you're allowed to work with OFWs when they come back to the home country. If you're an Indonesian, you're allowed to work with other Indonesians that live around the world and they come back to Indonesia. So you're allowed to work with international people. Now, if you are required to work or you're looking to grow internationally, you have to learn to collaborate. Now, none of us actually have the ability to be able to work with everybody in the world. So you have to choose the type of clients you work with. Now, for your initial base, before you go into the international market, guys, please understand the international market is deep. There are a lot of difficulties in terms of compliance, in terms of tax planning, in terms of estate planning, in terms of your regulation, etc. Before you get into international business, please make sure you're successful in your local market first. If your base is not strong, do not grow internationally, because your resources will get very thin. It'll get completely, I would say, well, the right word is it will get completely diluted, right? So your resources are limited. So first grow a strong local base, and then think about going international. And that's how you would work internationally. It's collaboration. It is not trying to do it yourself.
All right. Thank you, Dr. Sanjay. Next question. How do we collaborate with private bankers knowing that they are also interested in closing the
So
client?
I think one of the biggest challenges we have is when you're saying the word collaborate with private bankers. I have a lot of friends who are private bankers, right? I have a lot of COIs, what we call centers of influence, who are private bankers, who are not actually interested in understanding how insurance works, because they are very interested in managing the investment portfolio, the assets for these clients from a private perspective. On the insurance side, they usually outsource to an insurance broker or they outsource to an insurance advisor. The question is, are you that advisor that they trust? Because it's not just about commission, it's about making sure that the client is getting the best advice. Now, a lot of private bankers do not understand how insurance products are designed. I remember I was working with this private banker once and he said, Sanjay, I understand investments. So my client puts in $1 million, and over a period of time, that million will become 2, 3, 4, 5 million. I don't understand that you give $1 million to the insurance company, and if the client dies tomorrow, they have to pay 5 million. How does the insurance company make money? Right? So while it is something extremely basic for us, It's something extremely complicated for them, right? We have only paid 1 million premium. How are they paying 5 million if the guy dies tomorrow? How? Where is that money coming from? So what I realized was we've got the concept of insurance wrong. We've always put insurance separate from investments. You see, when you start an investment portfolio, your 1 million has to grow to become 5 million. So you have got what we call a growth rate. With an insurance, we start at 5 million and then we slowly reduce. So our 1 million portfolio grows, our insurance rate of return long term drops. They are completely opposite. So your investments increase over time, your insurance return reduces over time. The best time to buy insurance is 1 day before you die. You buy today, you die tomorrow. It's the highest ROI, right? Highest rate of return. So if you do year by year, the rate of return, it starts with 500% in the first year. In the second year, it reduces, it reduces, it reduces. And over a period of time, you would have achieved a lower rate of return, but your investments should have done a lot more better. So your insurance and your investment work hand in hand. While the insurance rate of return reduces, your investment rate of return increases, and they work together to complement the financial strategy. So if you have not earned money in your lifetime, we guarantee it by using insurance. And that's how I collaborate with a lot of private bankers, because I tell them an insurance increases the ROI of the portfolio just by paying a small amount of money as premium. And that's how I collaborate with them. They are not competing with us because they are not specializing in insurance. They are very specialized in bonds. They're specialized in private equity, structured notes, funds, etc. But it's not insurance, and that's why I collaborate.
Great. I hope that answers your question. Dr. Sanjay, next question. How would I convince someone to buy insurance, those that are already interested to buy
Well,
mutual
first of all, you have
funds?
to understand there are two different products. It's like saying, Sanjay, my clients want to buy a house. How do I sell them a car? Guys, they're two different products. It's apples and oranges, right? A mutual fund is investments into the markets. Now, mutual funds, you've got multiple types. You've got debt mutual funds, you've got equity mutual funds, you've got a combination, what we call a balanced fund, you've got commodity mutual funds, you've got real estate mutual funds. So there are multiple different types of mutual funds, right? Um, just give me a second, guys. 1 second. Okay. All right. Sorry. So, uh, mutual funds are investments. Insurance are risk management strategies, right? So, you're talking about two very different things. The purpose of mutual funds is to grow your capital base. Now, investments are great from a perspective of money that you want to invest in the markets. But insurance is money that you want to ensure your family has. So while you're doing investments in the mutual funds, if the funds do not perform, you could lose capital, right? But with insurance, you guarantee what you want to give your children. So do you want to give them $1 million? Do you want to give them $10 million? Do you want to give them $100 million? What do you want to give your children? That's what insurance guarantees today itself. With mutual funds, you have to wait till it grows to that level. You have to wait till your 1 million becomes 10, becomes 100. You have to wait, and you hope that your children will get that, right? So it's only a hope. We don't know what the market's going to look like. It could be positive, it could be negative. And I remember one of my clients, he used to tell this to me. He's like, Sanjay, when the stock market goes up, I'm very happy. When the stock market goes down, my blood pressure goes up. So, guys, I want you to understand this, right? Not everyone is built to handle volatility. Volatility is not for everyone. Some people, volatility is great, but for some people, volatility is not digestible, right? So, not everyone can handle what we call market risk. So, while we know that long term markets will perform, the volatility, not everyone can digest. So, that's how you have to learn to differentiate mutual funds and insurance. Insurance guarantees today, mutual funds hope for the future. Uh, so it depends on what the purpose of the client is.
Thank you, Dr. Sanjay. Next question. How do I know which specialization path is right for me?
The best specialization is the one that you truly want to tell everyone you're doing. So if you had to choose a specialization, right, choose the one that would make you feel proud. Would you like to be the risk manager? Would you like to be the asset manager? Would you like to be a specialist with corporate financial planning? Would you be proud to say that you're a family office manager? What would make you feel proud? Because all four of them have got different types of clients, different types of products, different types of conversations, different types of objections. Um, what makes you feel proud? So if you had the opportunity to say, this is a conversation that I would love to start. I would love to start with talking about risk and risk management and risk mapping, or I would love to sit down and talk about corporate financial planning. How do corporations manage human resources, capital acquisition, human capital acquisition, human capital retention, capital retirement. Please remember this. There's asset acquisition, asset retention, asset retirement. It's the same with your employees. You have to employee retention strategies, employee acquisition strategy, and employee retirement strategy. Just because you have hired someone doesn't mean that they will stay with you forever. One day they will also retire. So what's your succession plan? What's your inheritance plan? Because for an employee, you are concerned about succession, somebody they should hand over to, right? So when you have a CEO and he's done extremely well, and I'll give you a very simple example of that. Last month, Warren Buffett resigned from his CEO position, right? Now, the question is, he was CEO for Berkshire Hathaway for the longest time. And now you have a new CEO coming. How does the market think about that? How does the stock work? What has happened to the valuation of Berkshire Hathaway post retirement? By the way, he has not yet retired. He's only announced that he will retire at the end of the year. So he's got now 6 months of handover to the new CEO. He will still be a board member. So he's not actually leaving Berkshire Hathaway, which is what a lot of people don't realize. He's not leaving Berkshire Hathaway. He's going to be a board member, but he's going to give the day-to-day work to another person. So succession is a very important conversation in corporate financial planning. And so it always comes down to what excites you. So your choice of specialization is something that you would love to talk about every day. And that's how you choose your specialization. Something that you would love to tell people every single day, whether that's a Saturday, whether that's a Sunday, whether that's a Monday. I don't care which day of the week it is. If you like to talk about it, that's the specialization you want to be in. And I think that's the best or simplest advice I could give you in terms of choosing your specialization.
Excellent. Thank you, Dr. Sanjay. If you are to speak with a relatively newer advisor, would you advise him to go general first or immediately go to a specialization path?
Start with a general base, and I will always tell you, first get your first 100 clients, because then you will know what you like, what you don't like, what you like about the profession, what you don't like about the profession. Your first 100 clients are very, very crucial. You need a base to start from. Once you've built that base of the first 100 clients, now I would recommend you to start working on specialization. So it's just like a doctor. You start being a GP, you work, and then you identify really which part of the human body you like to work with. Is it the brain? Is it the heart? Is it your kidneys? Is it the liver? What actually makes you feel, you know what, that's what I want to study more in. And that's how you choose your specialization. So you first start general, and then you choose a specialization. But what my recommendation is, do it within 2 years. So if you have just joined the business, within 2 years, you should be making that choice, because otherwise it gets too late and you become a general practitioner, you become too comfortable and you don't want to change, right? So change can only happen when you're willing to change. And my recommendation, the sooner you change, the better it is. If you're new in the business, I would give yourself 18 to 24 months. And then by then you should know exactly what you like, what you don't like, and then choose that as a specialization.
Okay, thank you. Dr. Sanjay, your AI has been extremely helpful for me. My question is, will AI replace us advisors?
Let me give you the good news. While my AI is publicly available, nobody talks to it except advisors. And that's the funny thing, right? So my AI is available to my clients, but none of my clients talk to my AI. The only people who talk to my AI are advisors. That just tells you something very important. AI is here to help you speed up what you're doing. It is not here to replace you. So please understand, first of all, that AI of mine is not AI, it's an artificial brain with my natural intelligence. So it's not artificial intelligence, it's my intelligence. It's me, it's my clone. So the way I'm talking to you, my clone would actually talk to you. It's not AI. The word artificial intelligence means it is artificially intelligent using communal knowledge. My clone is only using my knowledge. It doesn't, if you ask it a question that I don't know the answer to, it cannot answer that question for you because it's based on my knowledge, right? So it's an artificial brain with my natural intelligence where I'm training me to be me. Now, it's supposed to help me speed up the process because while I want to do a lot of mentoring, right, it is a social activity for me. It is not a productive activity for me. Now, from a social activity perspective, I have a lot of mentees who want to ask me questions. I just don't have the opportunity or the time to be able to handle that. And there are a lot of basic questions that my clone can answer for me. The funny thing is, none of my clients like to talk to it. So while advisors love talking to my clone, advise we actually maxed out the number of minutes, and Nitesh is witness to that. The clone actually shut down for one day because we on on one single day, my clone had handled almost what 50,000 minutes in that one week. Sorry, not one day, one week. It had spoken 50,000 minutes in that one week, and it shut down for one day because we maxed out on the number of minutes that the clone can talk. Uh, and Nitesh was actually working with the developers to kind of fix that problem, and it took them 24 hours to kind of remove that limitation on the clone because we did not expect 50,000 minutes a week to get consumed. Guys, I want you to know we are spending, for every minute that you use, we pay $1. So that cost me $50,000 just for that 1 week of usage. But I'm just like trying to tell you guys that while advisors love talking to it, my clients don't. Will AI replace us? Maybe on the regular stuff, probably yes. But when it comes to, relationship, and there was something that Katrina mentioned in her talk was about relationships. Relationship due diligence cannot be handled very easily with artificial intelligence because people like to talk to people. And when it comes to very high net worth clients, they like to talk to people. So they might get validation from an AI, but they would still want advice from a human. So AI will be used for validation, whereas humans will be used for advice. So you will still go to a doctor, but you'll go to AI for validation, right? So please be ready for ChatGPT to be validating. However, the other problem is communal understanding of insurance is extremely low. So while other professions have got great knowledge, great insight, great intelligence, insurance as a profession has negative knowledge, negative connotation. So AI has been trained, so what we call large learning models, LLMs, right? So large language models, large learning models, all these big models are using more negative data about insurance than positive data. And that's what we have to work on, is telling our clients the positivity of insurance because there's so much more negativity about insurance, and that's what our role is today. So if you had to take on the role of talking about how insurance can be used as a tool, as a product in these different specializations. And that's why becoming a specialist is so important, guys, because it's hilarious. I'm actually part of a family office group, and in that family office, every single family office member, not one of them has insurance. I was shocked. I'm like, you're the richest people in this group, right? They're all rich guys. They're all multi-millionaire, multi-hundred millionaires, right? So they're all what we call centimillionaires. They're either centimillionaires or billionaires, and they have no insurance. And I was like, don't you have like private bankers or any of these guys who have ever pitched an insurance product to you? And they said, yeah, they have, but nah, insurance is not for us. And I was like, wow, I was surprised. And I ended up giving them advice on insurance to all of them. It was an absolute insane experience for me because I was sitting with some extremely wealthy people with all the negativity about insurance and not understanding how insurance will fall as a part of their family office. And You can see my family office right behind me. Our family office uses insurance as one of the most important products and tools for wealth transfer, for income distribution, for inheritance and succession planning, for liquidity blind spots. We use insurance as one of our core tools in the family office. And I share that with a lot of my other family office groups that I'm a part of. So, yeah, I hope that answers your question.
Okay. Dr. Sanjay, if I am to pick a specialization, do I only sell insurance or do I need to sell something else with that?
See, guys, when you choose a specialization, it's about conversations and knowledge. It's not about product distribution. So while you're choosing a specialization, for example, corporate financial planning, right? So when you're doing corporate financial planning, there will be multiple products that you would require in corporate financial planning. So it could be a little bit of tax advice, a little bit of legal structures. It could be a little bit about employee benefits. It could be a little bit about, like I said, credit insurance or other insurance products that you might not have distribution for. It's about giving the knowledge and talking about what you supply or what you can provide, right? So we can't supply everything. Let's agree to that. I don't want to become a supermarket for the world, because when you become a supermarket, it's about price competition. But when you are a doctor, you're an advisor, it's not about the price, it's about the advice, the quality of the advice. Learn to become a quality advisor rather than a supermarket. um, Organizations can be supermarkets, but individuals should not be supermarkets. Please understand the difference. Are you a pharmacy or are you a doctor? A pharmacy can have multiple products. So are you a pharmacy or are you a doctor? You have to learn to kind of differentiate between the two. My recommendation: become a doctor. You're a lot more valuable. Um, it's not that pharmacies are bad, it's just that that's a completely different business model. And not everyone has the capital, resources, regulatory compliance, licenses to become a full-fledged pharmacy, right? None of us can be. And it's significant amount of investment in terms of becoming a pharmacy, where you're able to distribute products from all over the world, find products from all over the world, manufacture products from all over the world, and you would still find clients who would have to leave saying, "You don't have my product," right? So you would still have clients who would say, "Oh, you don't have what I want." So please remember that it's not necessary. Insurance can be a specialization, and that product could be the one product that you distribute in that specialization. So you don't have to be everything to everyone. No, you don't.
Okay, Dr. Sanjay, I've been an advisor for 7+ years, but I've never achieved my MDRT. I could not tap into the high net worth market because I don't know what to say to them, how to pitch insurance to them. Because for maybe it's just my mindset, I am not yet good enough for them. What's your advice for me?
Read that book. Guys, if you are not able to start a conversation, it's because you don't have the right concept, right? That's the book you want to read. The concept presentation playbook has so many ideas and concepts in terms of how to start conversations. That's what you want to read, right? Guys, please understand this. Concepts are the way to start conversations. It's not about the product, it's not about asking too many questions, it's about sharing a story, sharing a case study, sharing a concept. That's what you want to be reading. So if you're an advisor who's been in the business 7 years and you're not able to start the conversations correctly, this is the book that you want to start with, right? The concept presentation playbook. That's what you want to focus on. I hope that answers your question.
Brilliant. Dr. Sanjay, what advice would you give to me if I want to go from part time to full time advisor?
The best advice is sooner the better, because you have to understand something. There is no part-time advisor. Is there a part-time doctor? Can you imagine you go to a doctor and says, "Oh, I'm part-time doctor. Once in a while I do a surgery." How would you feel? How comfortable would you feel? If you truly want to be a good advisor, you have to be full-time. Guys, there is no part-time in our business. If you want to know about the business, join part-time. But if you really want to be successful in this business, you have to be full-time. And I'll tell you something, the best decision you can make is to learn that this is a full-time career. This is not a part-time career. I don't know how many of you would trust a doctor uh, that's doing surgery part-time. And I hope that answers your question.
Okay, I guess the last question for the day, Dr. Sanjay. how do I become your mentee?
Guys, there are a couple of mentorships that I run. One is for those who are still learning, they're right in the basics, they want to get the basics correct. You have the asset structuring club, you have the FAS system, the financial advisory system on how to start conversations correctly. The asset structuring club also gives you access to my clone, so you do have access to my clone. Am I right, Nitish? I think, yeah. Guys, the mentoring program is the BCC program is specifically for advisors who want to get to the next level. So you should have achieved at least MDRT, because I want you to have your basics in place before you do join in. It's very rare I choose someone to join the BCC program who are not MDRTs. And it's very rare depending on their profile. So my team already knows the kind of people that I want to mentor in the BCC program. Plus, it's a very small group. I only choose a few people every year. By the way, I do remove people from the BCC program as well, for a very simple reason. If I'm spending time with you, I expect you to be doing what I tell you to do, right? I expect you to be following. Challenging me is absolutely fine, because you have the right to challenge me. But I want us to have debates. That's the most important thing, is understanding what you need to learn. The other thing is I am going to be doing a session just for leaders in Dubai in November. We're having something called the Leaders Circle for the first time ever, because a lot of leaders want to know how I do my business, where do I do my business, how do you manage high performers, how do you build high performers. So I did want to spend time with a lot of leaders. So if you are a leader that's looking at growing your team, I do have a leaders session. This is specifically only for leaders, somebody who already has a team but they want to learn to increase the productivity of that team. What are the best practices that other leaders are following around the world for recruitment, for retention, for management, for systems? So we're going to be discussing all of that. It's a 2-day session. This is going to happen at my house in Dubai. So for those of you who are leaders, you can come down to Dubai, see the system that I follow. How do I build my practice? How do I find clients? How do I do prospecting? How do I maintain my relationships, etc.? You will get to see my system. You'll also get to meet other entrepreneurs. Some of them are multi-billionaires, on how they scale their business, because one of the most important challenges as a leader is scalability. So that's specifically for leaders. In terms of my mentees, next month in September, we do have the mastermind in Singapore that is specifically for BCC members. The mastermind, we go deep into specializations, case studies. By the way, to be in the BCC program, you have to sign NDAs, you have to sign non-disclosure agreements, because I do disclose some very sensitive cases that I would otherwise not be able to discuss in public. So yeah, if you are joining the BCC program, you would be signing NDAs. If you're coming to the mastermind, you would be signing NDAs, because we are discussing some very specific cases. These are strategies that I cannot share in public because of confidentiality, because of the sensitivity of these cases, right? Some of these clients have got policies that cannot be disclosed in public. For example, $250 million is the largest single insurance policy that holds the Guinness Book of World Records. I can guarantee you, and I can tell you, it is not. But that's not disclosed, right? And the reason why it's not disclosed is for privacy, for confidentiality. Some clients just don't want that name to be disclosed, or that product or that size to be disclosed. So while the common knowledge is that the largest insurance policy ever done, sum assured, is $250 million, the fact is it's not. There are bigger policies. It's just that they will never get disclosed because of privacy, right? So when you do join the mentorship, we will be discussing significant cases, some sensitive cases, nationalities, structures, even how do you do budgeting, how do you plan, how do you target, how do you set a target. We're going to be discussing all of that in the 2-day mastermind. So to be a mentee, it's not that I'm not willing to teach, but I'm willing to teach when you're willing to learn. Guys, I can only teach when you are ready, right? So there's a saying in our culture: when the student is ready, the teacher shall appear. I'm willing to teach if you're willing to learn, but that is a choice you make, not me. I don't make any money from this. All the money goes to charity. This is not my business. I'm not a trainer. I am a practitioner. I have got client meetings today. I have client meetings tomorrow. So guys, let me be very clear about that. I am a practitioner. I'm not a trainer. So I hope that answers your question.
All right. I think we are done. Dr. Sanjay?
Thank you very much, guys. If I had to leave you with one last piece of advice, choose a specialization as soon as possible. Number one. Number two, listen to everyone that just watch this video again and share this with someone that you feel will need to learn this eventually. So if you have team members who haven't watched today's video, this will be available on social media, but we'll only keep it for 24 hours because there's a capacity in terms of data that now all the social media platforms allow you to keep. So we have to remove the video after 24 to 48 hours. So I assume we're going to keep it for another 24 hours. Do share this with anyone that you believe should have watched this video. If you have a team, we are not competition, guys. We are collaborators. We are colleagues. We're all working with the same mission, protecting families, protecting businesses, protecting society. Please share this with people that you believe should know this knowledge. This is our duty. This is our responsibility to the profession. Let's make our profession better by sharing best practices. So please, if you believe that this helped you with your business, this helped you with your system, this helped you with your business, your thought process, share this with someone who you believe needs to understand that. And it's been an absolute pleasure to spend time with you. Please do download the notes. The QR codes will be there. If you believe that you are a mentee that should join our mentorship, please do scan the QR code. You'll be able to join the mentorship program. You would have to go through an interview process. So just do keep that in mind. And if you believe that you want to come to the mastermind, do scan the QR code for that as well. You can come to the mastermind, but the mastermind, you have to be part of the BCC program to join the mastermind. So I look forward to spending time with all of you. Stay safe. Most important, stay productive. Guys, discipline is expensive, but it's the heart that you have to choose. So stay safe, stay disciplined, and I look forward to seeing every single one of you. If you are going to be at MDRT in Macau, I look forward to spending time with you there. I will be in Macau. If you're going to be at top of the table, I would love to see you there. I will be at top of the table as well. And I'd love to see you at any of the conferences that I'm going to. I love spending time with all of you. It's an absolute pleasure. And guys, like I said, share our knowledge. It's our duty to share, and please do continue to share this with everyone. Bye-bye. God bless.
All right. So for everyone who want to be a part of Asset Structuring Club and learn how to dip your toes into the high net worth market, there's going to be a barcode that you can scan. For you who want to apply to be a BCC member, there's also going to be a barcode that you can scan. There's a very limited number that we can accept for September and for 2025. So if you think you want to apply, you can apply for it. And if you want to be a part of the Leader Circle program that Dr. Sanjay mentioned in Dubai in November, then you can also apply for that program. The barcode is going to be available here. We're going to be sharing with you on how to expand and build a productive team. And for BCC members, we're going to be having our mastermind happening in September, the 22nd and 23rd of September. Do register for the mastermind because the materials that we're going to be talking about is going to be very valuable for you. And for some of you who want to buy the book bundle that Dr. Sanjay mentioned, there's a very exclusive rate. It's a very special rate for some of you who want to purchase it. The link is also available here for you who want to purchase the books. And yeah, so I'm going to be seeing you inside our masterminds. This recording is going to be available for 24 hours. So share this to as many people as you know that will be finding this valuable. See you in our next sessions. God bless.
Case Closer Mentorship. Let me introduce the next 12-month Big Case Closer Mentorship journey and explain how it will work for you.
The Big Case Closer Mentorship is one of the most highly anticipated programs this year. And here's why. I have designed it for advisors who are ready to scale their business, close bigger cases, and become true wealth advisors to high net worth clients. This mentorship gives you access to exclusive financial strategies, including asset structuring, which is becoming a go-to approach for wealth management. Why did I design the Big Case Closer Mentorship?
After spending 20 years in this industry and learning what truly works, I wanted to create a structured mentorship that would help advisors succeed in the modern financial landscape. The truth is that many advisors feel stuck with small cases and they feel they've hit a ceiling. And that's exactly why the Big Case Closer mentorship program was designed to break through these barriers. I saw that most advisors lacked access to high-level strategies like asset structuring, the kind of strategies that help you stand out and close over $100,000 of cases or even seven-figure cases sizes. The goal is simple. I want to elevate our profession by producing more big case closers who are respected by clients and positioned as trusted wealth advisors. Who is this mentorship for? This program is designed for three types of advisors.
Number one, advisors who feel stuck closing small cases. You're doing okay. You're closing $1,000 to $5,000 policies. You're working hard but feel stuck. Deep down, you know you're not living up to your true potential. You want to break into that bigger conversations, command more respect, and be seen as a professional, not a peddler.
Number two, advisors who are already closing big cases but want to scale. If you have closed big cases before but want to take it further, maybe even open cases that are $1 million range, I'll guide you with the latest techniques and the advanced structured strategies to consistently close ultra large cases. Number three, advisors interested in mastering asset structuring. This mentorship provides exclusive first-hand access to the latest asset structuring strategies. Whether you have already dabbled or you're completely new to it, I'll show you how to use it to close bigger deals, protect your clients' wealth, and make yourself indispensable to these high net worth individuals. What will you learn in 2025 Big Case Closer Mentorship? After coaching over 1,000 advisors over the last 5 years, I've refined a tested and proven roadmap that helps advisors enter the high net worth market and master big case closing. Here's a breakdown of what you can expect. Phase number one, building your sales foundation and skill set. When you first join the mentorship, you'll gain access to the Big Case Closer library, a comprehensive set of videos covering everything you need to know about closing cases of over $100,000. These are exclusive insights that I've collected over the last 20 years, which I've invested millions of dollars to acquire. You'll get curated videos based on your current skill set, helping you focus on the areas you need to improve most. This library will help solidify your foundation and start seeing immediate improvements in your commissions. Phase number two, acquiring the latest financial strategies. You'll also get access to the monthly workshops where I teach the latest financial strategies and asset structuring techniques. I'll show you what's working in 2025, and you can copy and adapt these strategies to your business. As the financial landscape is shifting, it's important to stay updated, and I'll help you leverage these changes to your advantage. Phase number three, exclusive mastermind sessions and offline meetups. In addition to online learning, you'll be invited to the offline mastermind sessions. We're organizing a 2-day high net worth mastermind in Singapore where you'll spend time with me and other top advisors learning how to apply advanced strategies in real time. These are the opportunity to network with other big case closers, share their experiences and refine your approach. Phase number 4, entering your insurance specialization.
Let's be honest, trying to do everything for everyone just doesn't work anymore. Clients are getting smarter and they want to work with someone who truly understands their world. That's why I'll guide you into a specialized insurance niche that aligns with your strengths, helping you stand out from other advisors and stay relevant in the market where estate planning, tax efficient structures, or working with family-owned businesses. Specializations will help you open bigger cases and attract higher quality clients. You will even learn how to write a profile that positions you differently.
Phase number 5, leveraging the Big Case Closer support system. After you start opening bigger cases, you may encounter challenges like complex client needs, tricky negotiations, or situations where you feel stuck. That's why you will have access to my Big Case Closer support system, which includes my team and the resources that are available to help you whenever needed.
You'll never lose a potential case because you don't know the next step. We have built a system to ensure you can leverage all the support you need and close all the deals confidently.
What's something new that's coming for the BCC program? First, and one of the most exciting things we have just launched recently is the X7 Pro. Built exclusively for BCC members, this isn't the same as the X7 sales cycle tool from ASC, or X7 Pro is my clone, trained with my actual framework, strategies, and daily to use client scripts. From concept presentation to handling objections and role-playing high net worth conversations. It's like having me in your pocket. If you've been thinking about entering the high net worth space, everything you need is already here. The only thing left is to start. We are also working on something incredibly exciting for the next 12 months that I can't wait to share with you. The BCC country chapters. This is a brand new initiative where Big Case Closer members will have the opportunity to host their own local meetups and mastermind sessions. Here's why this is a game changer.
As a financial advisor, I can sometimes feel that I'm isolated. We are consistently hustling to close cases, and while we have the tools and strategies, we might start to feel that we're navigating this whole journey alone. The BCC country chapter aims to fix this by creating a local community of like-minded advisors, offering a platform to discuss winning strategies, brainstorm solutions, and collaborate on opportunities in real time. Imagine meeting up with top advisors in your region, sharing what's working, learning what's new, and getting actionable insight you can use right away. It's like having your own mini mastermind where support and knowledge of your peers helps you stay ahead of the curve. The benefit goes beyond knowledge sharing. It's about building relationships, expanding your network, and having a go-to group for ongoing support, feedback, and motivation. For example, you could walk into some of these local chapter meetings, share a case you're working on, and leave with new ideas on how to approach that client, a fresh structure for the deal, or even a connection that could help you close that case. These sessions aren't just about learning, they're about taking immediate action and seeing results. While we're still refining the concept, be rest assured, if you're part of the Big Case Closer family, you'll be the first to know about this idea as it develops. This is your chance to tap into a powerful, localized support system that can fast-track your growth and success. The value of the program. When you look back at the journey I took, traveling the world to meet mentors, spending years testing and refining strategy, and investing over $2 million, if not more, into acquiring this knowledge that I'm sharing with you, it's easy to say that the mentorship is worth well over $100,000. But here's the truth. Even if you had that money, you wouldn't be able to buy this knowledge anywhere else. This isn't something you just pick up in a course or in a textbook. It's 20 years of first-hand experience with high net worth clients refined through countless real-world applications.
When I first started the Big Case Closer family in the late 2019, many advisors doubted the concept of closing bigger cases. Many felt that it was impossible and they require huge talent or a rich network to succeed. But let some of these amazing results we've gotten change your mind about it. We've seen members who have had no rich connections opening up and closing large retirement planning and premium financing cases, some even in millions of dollars of premium. We have seen members who have stagnated in their career for years clearing their 2020 target production in the first quarter of 2021 and are right now on track to doing the same in 2022. We have even seen new members who joined the program closing cases that are 200% larger than they used to do previously, just by tweaking and implementing new high net worth strategies, and the list goes on. But among these members, I'm super proud that 13 of them have shown the world that it is possible to achieve MDRT with one case and were awarded the Big Case Closer Award.
Hi everyone, my name is Kakalam and I'm from Malaysia. Today I would like to share with all of you about the Big Case Closer program by Dr. Sanjay Tolani. The reason why I joined the Big Case Closer program is because I was looking for a breakthrough for myself, and at the same time I faced challenges when it comes to closing big cases. Initially, I never believed that closing big cases is possible for me. But after joining the Big Case Closer program, my perspective about financial planning has changed. Dr. Sanjay taught me advanced concepts which were made so simple to understand, not just for the advisor, but even for the clients. Dr. Sanjay always reminds me to not complicate my presentation because simple concepts will always have a bigger impact. Besides that, he also guided me step by step through the whole process with a case studies. From there, it made me realize that closing big cases is not just about the case size, but it's more about the problem they have. My client will usually face a bigger problem when they need a bigger coverage. This program has helped me to achieve my first TOT last year, and also it has given me more confidence in providing the best insurance planning for the high net worth individuals. At the same time, it gives myself a chance to help them to do a precision planning and make them realize that regardless how wealthy they are, their financial portfolio will never be balanced without insurance. Looking forward to learn more strategies, and thank you so much Dr. Sanjay for this amazing program.
Hello everybody, my name is Benedict and I'm from Singapore. The reason why I joined the BCC program 2 years ago was because I needed to have a breakthrough in my career. Before joining the insurance industry, I was a relationship manager in a bank. Back then, I was very used to present numbers as well as diagrams to my clients. Those presentations were very complicated and many of my clients did not understand what I was saying. Through the BCC program and Sanjay's teaching, I was able to apply case studies as well as concepts into my presentation to make it very simple for my clients and friends to understand. By applying what I've learned in the BCC program, I was able to achieve 1 MDRT in one case in 2021 as well as 2020. How do I do it? Many of you have been asking me on social media. Well, it really is that simple. Learning the concept presentation and case study actually helps me simplify my entire presentation. By simplifying it, I was able to look into the problems more deeply and my clients could understand them better. So gone are the complicated presentation and numbers that actually boils down. Thank you Sanjay for teaching us, everyone here in the BCC program, how to get it done. I'm looking forward to 2022 to learn more from you. Thank you.
Hi everybody, I'm Portia Leung from Hong Kong. I have been in financial business for 21 years. Along this long journey, the way to run my business is almost the same every year. Production is the same, and the way to give advices to my clients are the same. I find it difficult to give a better solution to my clients, especially the high net worth one. The reason why I joined BCC program is because I was looking for a breakthrough and I want to upgrade my professionals to a high net worth level. Unlike the other courses that I normally attend, BCC program really told me the strategy how to upgrade my client market to high net worth step by step. Starting from prospecting, create conversations, concept presentation, and even closing big cases. The concepts I learned are down to the earth and easy to understand. Clients always found it really inspiring and was identifying their problem more easily. I can provide the best solution to them, and closing ratio has increased much. I believe one case, one MDRT is not a legend anymore, and everyone can get it. Thank you, Dr. Sanjay, to provide this amazing program to build my confidence and good foundations to be the best financial planner.
I've dedicated over 20 years to perfecting these strategies, and now I'm ready to share them with a select group of advisors in 2025. This is your opportunity to join an elite circle of financial professionals, learn how to close six-figure cases, and start earning the kind of commissions that will change your life. If you're ready to take your career to the next level, don't wait. Sign up now before the slots are filled up, and let's work together to closing bigger cases in 2025. I look forward to seeing you in the Big Case Closer Mentorship and helping you achieve the results you've always dreamed of. Together, let's close some bigger cases.